All right. Ladies and gentlemen, Rodrigo here with Benzinga, of course, and we have Matt Maley, Chief Market Strategist at Miller Tabak. A lot of you guys already know Matt from CNBC, Bloomberg, or from his live trading room. And we will be here for about an hour around there. We are going to be discussing trade ideas, options education, setups, market discussions. We're going to cover a lot of stuff here. Let's go ahead and bring on the man of the hour here, Matt Maley. And for everybody that's watching here on the Zoom and the YouTube side, throw a 1 in the chat if this is your first time in this session. Throw a 2 if you've been here before. All right, we got Matt Maley in the house there. Let's go.
Damn, son, where'd you find this?
We got Matt Maley ready, good to go here. What's going on, man? How was the chat room today?
You know, it was good. It was kind of interesting because we thought it was going to be a disaster. I must admit, we set up ourselves a little bit on the bear side. We were worried that Walmart was a little overbought and the Home Depot was a little over. I shouldn't say overbought, but the retailers were a little overbought, and Walmart's rally had kind of faded. So we set ourselves up, with some bearish bets on the XRT, not big, the XRT retail ETF. Some bearish bets on the overall market, and of course, when we got the earnings reports and the PPI number, it looked like it was going to be a complete disaster. But long before we heard news, later in the day, in the afternoon, that there might be some problems with going on in Ukraine, with Poland more specifically,
Right.
with these missiles going into Poland. We were already saying, hey, this market's not acting all that great. I mean, we're not seeing the big follow through we saw the day the CPI came through. So we held on our positions and turned the day into a profitable one, and where we actually made a little money from one that looked like it was going to be a rough one. But again, you're not going to make money every single day. Looked like it was going to be a bad day, but we kept our heads about us and made some nice money and some nice setups. I think maybe some good setups for the rest of the week as well.
Right. So, and I'm showing them the chat room, but if you want to go ahead and share your screen, Matt. And also, I specifically wanted to ask you about that. I just saw the news that those missiles went into Poland, which is a NATO country. And you know what they've said before, that is the red line. Do you think, what do you think the market will care about that, or?
Well, I mean, it's funny, and I'll just I can go back to this chart. Let's just look at what happened in the market today, and I'll just look at the SPX. Whoops. Excuse me a second. Just have to move some things around on my screen so I can pull this stuff up. So this is just what we call a GIP chart. Sorry for the bouncing of the screen there. And this is, there we go. What, the S&P today. Okay, this is just today's chart. We call it a one-day chart, GIP chart. I forget what GIP stands for. But anyway, you see how the market opened strong. See this line right here, this little beige dotted line? That was where the market closed yesterday. So that would be unchanged on the day. We see how the market opened very strongly above 4,000 on the S&P. And what, it was after this better than expected CPI number. We also had some good numbers out of Walmart, and people were starting to think that, oh my gosh, this is going to be another one of those days where the market goes up 5% or 7%. It was, last Thursday we got the CPI number. The S&P was up 5%. The Nasdaq, or the NDX 100, Nasdaq 100, was up 7% that day, and followed through the next day. I thought, oh, it's going to be this great big short squeeze, going to push the market way higher. Well. And what happened that day when the CPI number came out, the market opened higher and then kind of danced around a little bit. And then as the day was on, the squeeze started going in the last 2 hours, especially the last hour. The shorts got squeezed really badly. Well, here we opened up higher and just traded sideways for several hours. And I knew just from experience is that you really have to know what way people are positioned out there, and you also have to know how they'll probably position. And the way the algos are set up. The algos are, they're really these brilliant computers, and they're programmed by these really brilliant people, but they tend to follow some pretty kind of silly things. And I do know sometimes that, hey, if they think the CPI number was squeezed, they have got it programmed that they are going to buy the market because they think there's going to be another squeeze out there. And sure enough, they were buying all in here. and yet the stock market didn't go, and that got me concerned. And again, so I was saying, let's hold on to our puts. That's our bearish bets. I did get out of the XRT retail ETF. Just took our loss there. And sometimes you that's a smart. I mean, it's risk management. That's such an important part about active trading. It's important about any kind of investing. I did get out of that, but mostly we just kind of hung on to things. And then this news came out, of course, about Poland. The stock market got hit. And then it started bouncing back. I was like, oh, here it goes. They're buying every dip all over again. But it didn't see that big rocket back. I mean, just, again, experience told us it's like, there's a lot of skepticism going on out there. And you know, I got my eyes peeled. You know, we have CNBC, Bloomberg TV, all these things are on all the time. Some of the people they have on there aren't so good. I'd like to think that I'm one of those that is good, but they definitely have a lot of good people, especially in times like this when there's emergency. And you really listen to what these people are saying. And it was so interesting how the guys who worked for the firms who were portfolio managers weren't necessarily geopolitical experts. They were saying, hey, this is not that big a deal. Russia wouldn't do that on purpose. It was probably a rogue missile and such. But nothing. But the geopolitical guys were a little bit more cautious. Some weren't. Some were saying, you know, this is not, and most were saying, hey, this is not the beginning of World War III, et cetera. But everything we got out of the government, from our government, from other governments, were definitely not. I mean, I was expecting to say, don't worry, it's not the Cuban Missile Crisis. We don't want to jump to guns. We don't want to start World War III. It was more like, hey, no, Poland is a part of NATO, and we're going to defend them. I mean, again, I'm not saying that suddenly we're going to wake up tomorrow morning and we're going to have a major war and the market's going to be down the limit, down 10% or something crazy. Mm-hmm. But the point is, the gibberish in here. If this had happened last week, people would have bought this thing right. I mean, they just would have bought it right back up. And the fact that it lost its steam tells me that there's just a problem out there. Now, we have a lot of other problems going on out there too, that we've all heard about all year long with inflation and stuff. But when you combine that with the fact that the inflation data that we saw last week and this week was only slightly better than expected. I mean, you know, if you were a pollster, you'd say it was within the realm of error, you know, right? These were not wildly bearish. Bullish numbers. Now you do have some certain professors sitting there talking about how see, I've told you it's the death of inflation. I think the guy's dead wrong. I mean, I know he's well respected and all that, but he's been bullish all year and been wrong. So he tried to claim he's tried to claim he was bearish for a while, but. Anyway, the point is that this inflation has been induced by supply issues, not demand issues. Yes, and I've been saying for 6 months or more, inflation will come down in the second half of the year, but won't come down anything like it has in the last 40 years because it's some supply induced. We have to compare apples to apples, and so you have to compare it to the 1970s, and that was the other time when it was supply induced. Because of the OPEC oil embargo. Therefore, even though inflation will come down, it won't come down a lot. That's going to cause problems for the marketplace. But anyway, so you combine this with the fact that the situation in Ukraine, if this is getting worse, we really got to wonder what's going to happen here with on the inflation front. Because if they keep these sanctions on for longer, that means oil prices are going to remain higher. Gas prices are going to remain higher. I'm talking about gasoline and natural gas, and of course, food prices. So wheat and corn shot up today. That's what we're really worried about when it comes to inflation. So a lot of things going on right now. This geopolitical issue is something we have to keep a close eye on. When I first heard about it, I was like, what's the big deal? I don't understand. In fact, we did buy some calls in here, some index calls, and the market rallied up. We sold half of them at the end of the day because I just didn't. That's one of the things we do in the chat room. We buy a lot of, we do a lot of trading in options, although we trade stocks as well, but trade a lot in options. But frequently we will put on hedges. If we have a bearish bent, we'll buy some calls to hedge ourselves a little bit. And you think about it, if you're long a bunch of stock, if you're long $5 a stock and you're short one, usually. You're long $5 stock and short $1 stock. Well, if they both all move together, right. Not really very much hedged. In the options market, though, you can fully hedge this whole portfolio if you're 5 to 1 to the opposite side. So that's the types of things that we're working on right now.
Matt, so I just saw that the White House is asking Congress for $37 billion to send to Ukraine. And I know there's been a lot of, I'm not saying if it's right or wrong, but we have put a lot of money sending. Does that I mean, that obviously is not good for inflation, right? And we don't know how long this could be. Do you think that that would be, if we continue just, printing money for the stuff, like, would that be a problem down the road with inflation, or it's not really that much money?
Rodrigo, there's two answers to that question, and they're both. Don't worry, they're not like this and they're this. They're both on the same side. They're both. I'm sorry to say, on the bearish side, but you hit the nail on the head in the way you asked that question, because I'm not here to tell you what political should or should do. And when the election comes around, we talk about what looks like is going to happen, not what we think should happen. That's not my job. My job is try to help people make money. Okay. This may be something that is going to happen. I'm totally against it. Doesn't matter to me. It's going to happen, or it looks like it's going to happen. That's what I react to. I don't react to what should happen. That's why some of these professors will keep saying the Fed should be doing this. I'm like, that's great. You've been saying that all year, and yet the Fed hasn't done it. You got to concentrate on what the Fed is doing, what the Fed's going to do, not what you think they should be doing. So anyway, let's get back to the real question, though. The first of all, we're spending more money. So we're going to have to spend more money, $37 billion, $38 billion, whatever it might be. In the total budget, that's a lot of money, but it's not crazy backpending. So to a certain degree, it's not great, because we're just, again, the deficit's getting worse, and with interest rates going higher, that's a problem. But the real problem, Rodrigo, is it says that because there's been a lot of talk going into this election, that as we move past the election, people are going to start focusing on other things, and they're going to say, we don't support all this money going to Ukraine. You got to spend it here in the U.S. It's like, we can't be spending more money, so we're going to spend what we have. That means we got to spend less on Ukraine and more here in the U.S. Well, guess what? Now they're saying, nope, we're going to keep spending money on Ukraine. What does that mean? That means the war is going to last. One of the things, again, I'm not a geopolitical expert. I follow stuff very carefully. I have long before I was on Wall Street. I did in high school and college. It's just something I'm interested in. But obviously, as a strategist, there's just no way you can not follow these things. And from what I understand, Russia has been preparing for a winter offensive, and that Ukraine was starting to run out of men and supplies. Well, guess what? The U.S. has just re-upped. Now, I'm not saying the U.S. was going to turn away, but this keeps them. They're going to go, oh, we're going to go a little bit. Nope, they're right back in. Plenty more money. That means the war is going to go on for longer. That means the sanctions are going on for longer. That means oil prices are going to stay higher for longer. That means gas prices are going to stay higher for longer, and food prices are going to stay higher for longer. And that is not good. Then we start talking about stagflation. Well, we've been talking about it for a long time. But to answer your question, this is not good news on that front. We don't need this to be turned into World War III, that a Cuban Missile Crisis where we start to have this big standoff or something like that. All we need to know is that we're going to back them even more now, and this talk in Washington D.C. that's been going on for the last 2 months, that they were going to kind of back away. It's not, again, it's not our war, but we're funding it. And the longer it lasts, the longer inflation is going to stay elevated. Doesn't mean it's going to stay at 8% or 11%, but if it stays at 4 or 5%, that is not going to be good for a market that's still very expensive. So we still have a lot of volatility in front of us. In fact, I think we're going to have a lot of volatility. I've been saying we're going to have a lot of volatility for the rest of this year and probably into next year. I think we're going to have a lot of volatility for a couple of years, because when you take the amount of liquidity out of the system that we are taking out, we can no longer, you see what's happening in the cryptocurrency markets. This is going to happen in a lot of different industries, but not just the cryptocurrency market. A lot of people have been swimming naked. Now they're being exposed, and it's going to cause problems. So right. We got a ways to go in this one, and that's what's great for active traders. And it's not good for the buy and hold people. It's great for active traders.
Yeah, this is it's a trader's paradise. And so let's talk a little bit about the crypto. Obviously, what's going on with this guy Sam, and how do you think the crypto crash is going to could it impact the broader market? Do you see any, things trickling down into a much worse scenario?
Well, and yes and no. I mean, thankfully, it's not a huge market. This is not like the mortgage market of 2007, 2008, where it just crushed the banks and who were leveraged to the hilt to that market. But it's some people are going to lose money. And the problem is, it's just one after another. We first it was, a few, cryptocurrencies were having these problems. Now, then a few, few crypto exchanges, and now we got a few managed, and then they weren't really exchanges, which is another thing too. But I guess my point is, the faith in that business is disappeared. Okay, and it's going to take a long time for it to come back. So even if you're a believer in crypto, and I'm not here to argue about the very long-term prospects of it, there's a lot of reasons to think that it could do fine. But there's going to be a lot more regulation, which will actually be bullish, but it will take a long time for that to get passed. And it's going to be a long time before big institutions come in and start playing in that game again. And that's to really give it a legitimacy. So, but to answer your question about when it spills over, but the problem is we just shows we have all these different businesses. I mean, the cracks are been taking place since the summer. It started off with the tech companies announcing hiring freezes, right? And then now it's suddenly their earnings have been horrible. So how the big tech companies have been horrible. The semiconductor stocks, horrible earnings. Even Apple, even though the stock went up, their earnings report really wasn't that good. The stock only went up because it wasn't as horrible as everybody else's. Well, guess what? The stock's still below where it was after they reported earnings. Even saw this huge bounce recently. Okay, so it's passing. It's all this added leverage. Excess liquidity and leverage that was in the system is making its way through the system. Crypto's the latest. So we went from hiring freezes. Now we have layoffs. Amazon 10,000 people, Meta 12,000 people. This thing is marching through. Now we get the liquidity problem with the cryptocurrency market. What's going to be next? Housing. I mean, whatever. We know what's happened in China with their property markets. We know what's going on in Europe with their economy going into recession. I don't want to. I know I'm kind of getting a little too worked up here on the bearish side of things. I don't want to overstate it. But the point is, people, when you go from massive levels of steroids and you come off those steroids, you don't go back to the old ways. Okay, you can still be strong, but you don't want to go from bench pressing 250 pounds to 500 pounds. You go back to bench press. You can bench press 250 pounds. You're still strong, but guess what? You're not as strong. You're lower. Okay, and you can still do fine. But that's what we're in the phase. We're coming off all these massive steroids from liquidity. We're going to get down to a level where the stock market is trading on its own fundamentals instead of way ahead of its fundamentals, and that's a process that's going to take
right
a lot longer than it already has.
Do you think that? I mean, is QE just a regular part now? Is it the norm? Do we take the good with the bad of it? Is it sustainable, honestly?
Well, that's what we have to do. I mean, that's what the Fed has had to do this. And beginning of the year, I was like, what are all these knuckleheads talking about that we don't have to worry about the Fed tightening? First of all, every time the Fed is tightened, every time, it's caused a bear market, at least a deep correction close to down 20%, and almost always a bear market. So these people saying that back then, they say, oh, don't worry, 3 to 5%, maybe 7% at the worst. Like, what are you talking about? But when you're getting rid of QE, it's always worse. Now, again, there hasn't that many examples. I agree. I admit. However, you can't. The only time you have the kind of valuations we had in 2021, the only time I've ever had that, well, it was 1929, a whole different shit, and in 1999, 2000. That's because back then the Fed and other central banks was flooding liquidity because of Y2K. And when the Y2K problem was fixed in 2000, they pulled the plug and the market. Well, guess what? This time around, they massive liquidity because of the pandemic. Now they're pulling the plug. Things going down, and it's got to go down further. When you get valuations to excessive levels that cannot be achieved unless steroids are in place, it has to come down further. If we had never had inflation, we're always going to have inflation because that QE program was so massive and it was going to cause some inflation. would be got much worse because of the Ukrainian war. But no matter, even if we had not had big inflation, the market was going to see a deep correction, 15 to 20% minimum, because we were going off the steroids. And there's no way around it. So some people are saying, well, we'll just go right back on the steroids and say, well, whenever the market goes down, whenever we go into recession, whenever we have a bear market, or even just a deep correction, it doesn't stop going down. And the Fed doesn't reverse things until the market gets cheap. People keep trying to guess when the Fed is going to, well, this happened in the past. This is what caused the Fed to finally pivot. This kind of got, the one thing that stands the test of time is the Fed never pivots till the market gets cheap. Okay? So don't expect that. If something changes and they do pivot on a dime, I will change my stance immediately. Okay. And the pivot is not a pause. Pausing, slowing, going from 75 basis points to 50 basis points, even to 25, is not a pivot. It's not even a pause. Okay. But if they pause, okay, they just stop raising interest rates. That's not a pivot. Okay. And because they're still going to be shrinking the balance sheet. Okay. And even if they don't do that, the only way a pivot is when they start cutting interest rates and adding more QE and adding more liquidity to the system. One or the other or both. Okay, I believe we're a long way from that. And as I've been saying all year, yes, the Fed at some point will probably have to pivot. But when they do, just like it has every other time in the last 50 years, 70 years since World War II, it won't happen until the market's cheap. It won't happen until something breaks. It won't happen until the market's a lot lower. I've been saying it all year. I've been right, and I still think I'm right on this one. Markets don't bottom at fairly valued. We're still overvalued.
Right. And yeah, I mean, that makes sense. And I know this is a great opportunity, Matt, not just for trading, obviously, but then for people to maybe find some high quality stocks. I know you're a big fan of Google. I mean, you explained it, several times, and that's really where I see the value really that you bring to the table. It's not just trading stocks and options, but then also people that, the buy and hold category. This is a great opportunity for everyone, really, right?
Exactly. But I do think some people are getting, at least again, when I hear and read in the financial news, is these people are getting too much. Oh, the stocks come down 80%, so it's a great buy. I'm like, it's down 80%. It's still expensive, or it's down, it's nowhere. It's not grossly expensive like you see. It's still relatively expensive. But there are some great opportunities. Google's the one we've been talking about. Rodrigo and I have been talking about in a lot, and in the chat room, because it is cheap. It's only been this cheap based on its PE ratio, its price earnings ratio, three other times. The bottom of the 2008 crisis, the great financial crisis, and then in 2011 and 2012. Okay, that's when its PE ratio got into the high teens. And then we're back to that level where we were when the market was down. And so I was saying, hey, let's go in and buy the stock. I wasn't saying go in, buy the double digit, pile into the Google December calls. I was saying start buying the stock gradually. Buy it every month for the next 6 months, maybe even the next year. And when the stock is up 300% 3 or 5 years from now, and your average price is going to look so good, but you can't get the exact bottom. But the problem is you got to put stocks that are really cheap, not just stocks that have come down a lot. Apple's a great company, but the stock is not cheap. Okay, it's not expensive, but it's not cheap. And every bear market is like I said, is gone. It's the way the world works. So it's a lot of people. The pendulum always swings from side to side. It's just the way we have cycles. I don't get too theoretical because I'm certainly not a theoretical person. But you sit there and you say, hey, we get spring, summer, winter, fall every year. Sometimes the winters are really bad. Sometimes they're not so bad. Sometimes the summers are really great. Sometimes they're not as great. All right. But we have them. There's cycles. We have every year has 365 days. With do the leap year thing. We have every week, every day is a cycle. Every day is a cycle. You go into nature. You get a great big forest that grows to the top. Everything gets covered and everything underneath dries out. Lightning bolt comes down. Sparks a fire, everything burns down, it starts all over again. Cycles, what it is, all cycles. People have come to believe before this year that the Fed had basically taken away the business cycle and the market cycles. And that's not the case. So instead of, and so what I'm trying to do, and we've been trying to do here with this chat room at Benzinga is educate individual investors to take advantage of it, and not get burned by it again, and not cry, sit there passively. We have the tools now. Now I can ramble on for hours, me, I keep going, but the point is that 10 years ago, we didn't have these things. Now we have Apple Computer. You want to buy, if you hate Apple Computer, or if you love Apple Computer, whatever it happens to be, you think between now and the end of the year, one person thinks it's going to go up 30%. The other people think it's going to go down 30%. But you know something? I think it's going to go most of that time tomorrow after NVIDIA reports. Okay. Mm-hmm. Okay, great. That's fine. So 10 years ago, you bought the only calls you could buy, okay, in December, 2 months from now. Okay. If you wanted to buy the puts, December, 2 months from now, because they only had quarterly options. Now I said, no, I'm going to buy it because I think it's going to move huge this week, because NVIDIA is going to report and they're going to say Apple's we're selling all this stuff to Apple. Well, guess what? You only have to pay the time premium for 3 days. Okay, that is way cheaper. You make way more money. And again, if the time, it's like, how often does it, when you had quarterly options, how often did something happen the week that option happened to expire? Something big. Well, now you have it, they expire every single week. So when it does happen, you will have the opportunity to buy or sell that option the week the big thing happens. And so you don't have to pay. Again, you're if you don't understand options, you don't have to be an options expert. Just to realize it's like buying insurance. Somebody's going to sell you insurance. They're going to say, well, I'll insure you. I'll insure you for 2 months or 3 days. If I'm only insuring you 3 days, my risk is much lower. I'm not going to charge you as much. If I'm going to charge you for 2 months, I'm going to charge you a lot more. But now we have weekly options and 3 times a week options when it comes to the indexes. We don't have to pay through the nose. And the last thing, I'll just 2 more real quick things on this. That's number one. Number one, they're very liquid, which is great. And we don't have to buy, you don't have to be a gazillionaire to buy these things. Okay, that's number one. And number two, we also have ETFs. We have inverse ETFs. We have leveraged ETFs. Many of them have very liquid options. And again, these are the things that 10 years ago, only some of them were around, but they weren't very liquid. 10 years ago, only the institutional investor could take advantage. Now everybody can. And that's why I've been so excited about the activity we've been able to trade this year, and the profits we've been able to make.
Yeah. So you're buying calls and puts. These are like $1, so or less than that. So these are not, crazy expensive calls and puts. I guess we kind of missed this out, Matt, but for those that are watching, there's a lot of ones in the chat. So a lot of people that are watching for the first time. We didn't really go much over your background. You have 40 years in Wall Street. You've been, if you don't mind just going over that really briefly so that the folks can at least get a sense, of the person behind the picks.
Well, yeah, I'm sure they're much more interested in my my Division III Colby College football career, so I could spend an hour talking about that too. But I don't want to bore anybody. So as I always joke around, people say, "Why didn't you play at Ohio State?" I said they said I could play at Ohio State if I'd just been bigger, stronger, faster, and a better athlete. But I didn't quite feel any of those things. But in all seriousness, we got 40 years on Wall Street, and my 40 years has been the first 25 years was a trader. Okay, the reason why I even mentioned the football thing, by the way, is because I had my hip replaced last week from an old football injury. So it's on my mind right now. Anyway, 40 years on Wall Street. I started off in the 1980s working for Salomon Brothers. Now, if you've read any of the old books, and if some of you younger, you've never heard of Salomon Brothers, and that's fine. But it's a book called Liar's Poker about the heyday of trading back in the 1980s. And early 90s. It's just unbelievable. And it's a short book. You'll love it. It's one of the best books from Wall Street, but best-selling books ever. And that's the firm I worked for. Back then, they were the biggest trading firm. We were the biggest trading firm on Wall Street, the 70s, 80s, and 90s. I was there for 15 years in the 80s and 90s. And bought up by Travelers, and it's now part of Citigroup. But the point is, I got to, and then after that, I spent 10 years on the trading desk at Merrill Lynch. And these are two, it was the most powerful trading desk at Merrill Lynch. I'm sorry, on Wall Street at Salomon Brothers. And then the biggest trading desk on Merrill Lynch, which was also a very, very powerful one in Merrill Lynch. So 25 years. And I covered the institutional trading desk of the biggest institutions in the world, the biggest mutual fund, the biggest hedge fund, huge banks, insurance companies, et cetera. And when you work at talking to these traders every single day, you learn about, we don't care about this theoretical BS, okay? Most strategists are former economists, former analysts. I'm a former trader, okay? And I'm still a trader, but it's like, you learn to be, what theoretically should happen 3 or 5 years from now. I care about what's going to happen 2 weeks from now. Now, the fundamental theoretical aspects are very important. I follow them very, very closely. And that's why, we do, when people ask me, hey, this is why I like Google for a number of different reasons. One of them was just evaluation. It has nothing to do with the technical or trading aspects of it. I love it because it's a cheap stock with a great business and a great future. And there's a lot of things people don't like about Google. That's fine. I'm just saying, it's what they're done, nothing what they're doing is against the law. So I like the stock. So anyway, but the point is that I learned about what's going to happen, what is really happening, not what should be happening. I don't care what the Fed should be doing. I care what the Fed is doing and what they are likely to do in the next couple of months. What they'll do 2 years from now doesn't mean anything. I don't care. I don't care, because when we have the big bucket with the long-term portfolio, 3, 5, 10, 20 years out the horizon, but we have that other bucket for those who like to trade actively. And we're thinking, some people are day traders, some people are thinking 2 or 3 days out, some people are 2 or 3 weeks out. And of course, some of those 2-day trades turn into 3-month trades. But the point is, that's what I'm looking at. I'm looking at the next few weeks. Because that's, and some of these strategists that come in and they try to pinpoint. I've laughed over the years. They say, I don't understand, why is the market going down? Now everything's really bullish. Because markets don't do, the market is not always right. The market is only always right eventually. Okay, that's what you need to know. So I came again, like I said. So I learned about trading and learned about making money rather than the theoretical stuff there's a reason. Just think about it for a second. On Wall Street, there are less than 10% of the recommendations you have: buy, sell, hold. Way less than 10%. I think it's 4%. I shouldn't quote that number, but I know it's less than 10% have sell ratings. Why? Because their job is to be bullish. That's their job. Okay. And even in a year like this, where the market's down 25%, you think, oh, well, all the sell ratings have gone way up. They're now, sell rates are probably 30, 40%. Nope, they're still way down. The hold is really a sell rating. And then people will, it's really come out and say, I'm downgrading it to hold, but it's really a hold. It's not a sell. Kind of, how can you trust people that are flat out admitting that their hold recommendations are really sell recommendations? It doesn't make any sense. So, that's what we try to do. That's what I try to do. Luckily, I work at a firm, Miller Tabak, who allows me to just say, hey, you say what you think. You're not here to. We want to help our customers make money. Whereas a lot of these other firms, whether they be buy side or sell side firms, a lot of them, their whole thing is getting money under management. Just get the money under management and keeping it here. Okay, they don't care about whether they're at, let's make sure that convince them to make sure they don't sell and go into a cash account. Well, no, that's not what I'm here about. I was telling people to raise cash in December of this last year, January of this year, through the first quarter. Bear market's coming. I did the same thing during the bear market rally in the summer. I'm basically doing the same thing now. I think we have further to go. But that's my background, and so it's and a lot of you probably seen me on CNBC or CNBC Asia from those from the side of the world, Bloomberg out of Europe, and all the. Oops. Okay. Oops, something just appeared on my screen. I thought it was. We got cut off. Anyway, it's a I have a nice wide following, but like I said, from a plethora of some of the best minds on Wall Street, and as I said, I talked to Carl Icahn last Tuesday, just before I had my hip surgery. But anyway, he called me. So and asked me what I was thinking. So anyway, it's just, the point is, I'm not trying to sell you anything. Okay. Most of those people are trying to, buy this mutual, buy this fund, buy this. I'm just sitting there going, hey, if you trade a lot, you trade a little. I don't make any more money. I'm not here to try to churn an account or anything like that. You don't have an account with me. I'm not your financial advisor. Well, what we do in the chat room is we just talk about the markets all day long. And that's the last thing I'll talk about just within this one particular issue is that in the overall situation, think about these guys I just talked about. You work at the biggest hedge funds in the world. Guess what? Are the biggest and the best. Some of the best hedge funds are have small number of people, but most of them have and they sit at a big trading desk, and they got a dozen guys, or maybe in some cases a couple of dozen guys sitting around them. Certainly several guys, and they're talking to each other all day long. Did you see this? Did you see that? Did you see that development? This stock was downgraded. Hey, there's a bomb. Hey, did you hear about Russia? There's these guys are doing something, and his buddy says, hey, Russia just a bomb just went from Russia into Poland. Market's going down. Oh my God, I got to change my trade. Okay, and they have brokers calling them. All of these hedge funds and mutual funds, these big trading desks, they have brokers calling them all day. Have you seen this? Do you know that? What do you think about this? They're giving them ideas, throwing stuff out there all day long. How are you going to compete with those people if you're not in a group chat room like that we have? And again, there's not 20,000 people in this chat room where we're trying to churn and burn. We'll show you some stuff shortly where if I go in and buy something, I tell you, this is what I'm going to buy. I give you the exact thing. I don't go in and say, I go, geez, I'll buy some Apple calls and then, load up on those and then come in and say, hey, guess what? I hear Apple's about to, and spread some stupid rumor. No. Okay, no. So I can spread the rumor out and get the stock to jump up so I can dump it. No, that's not what we do. You know the trade before I do it. Okay, tell you the trade. I say I'm going to do this. Boom. Okay, and when I sell, you know it. Okay, so if somebody's doing a pump and dump, they're not telling you that oh great, the stock's moved up. I'm gonna start selling. No, you know it. When I say I'm going to sell this option, this put, this call, this stock, whatever. And you get the exact trade. We don't say, hey, look at some Apple, Apple calls right here. We say, no, look at the Apple 150 calls, November 18th, 150 calls. This is what we're going to buy. And then when we're going to get out, we get out, and we have a separate thing on the page to tell people what exactly we're doing. But the biggest thing is that I'm not the only one giving ideas. There are people in the chat room. We have some day traders in there who are trading all day long. In and out of things. We have other people saying, I like this for a trade for over the next couple of weeks. I like this for longer term. And we're making these plays. And some of the best trade, we had one trade where somebody made 2,500% on an Amazon trade. And I said, geez, I love that trade. It looks really good. But for whatever reason, I didn't want to participate. What a dope, 2,500% to buy Amazon calls. But we've also had one where we bought some ones where my previous record was Viacom puts, where we made 5,000%, and some FXI, which is the China stock market, where we made 8,000%. But anyway, the whole idea here is to try to keep people, give them ideas and give them confidence too. And people say, hey, I'm thinking about doing this. What do you think? And I'll say, yeah, I don't like it. Or, oh, that looks good. I'm not going to play it because I already have too many positions right now, but that's a good idea. Go ahead and try it. And if somebody said, well, I don't really, yesterday, Home Depot, I didn't play in it. I said, well, I was doing the XRT. I said, well, I'm not going to do Home Depot, but if you want to, these are the ones you ought to look at. These are the puts you ought to look at. But other people are constantly giving ideas and really good, profitable ideas out there. And so, but the point is you have somebody to talk to. All these big shot hedge funds are running billions of dollars. They're talking to people all day long. If you're just sitting there by yourself listening to the financial news, which again, the financial news, there are a lot of good people on there. There's a lot of people aren't so good. They're just, like I said, they're kind of perma bulls and they're paid to be bullish. But there's a lot of good people too, and you can learn a lot from them. And I always have it on in the background. These people, if you're a trader and you're not, and you're not in talking to people that you trust, again, you can be in a chat room where you got 30,000 people in it, and some guy is trying to, it really works for a hedge fund. He's trying to get, spread a bad rumor about something so he can make a profit. That's not what we're doing. We're doing in there just telling what we're trading and what we're trying to make. Rodrigo, you there still, or? We can show you some of the trades. I'm going to show you something we did this week. Hold on a second. Okay, I'm going to go over to my Oops, wrong one. There we go. Okay, hold on one second.
Yeah, sorry, I was muted here. For some reason, I had some issues with my microphone, but
No
I think
problem.
it's a good time to show, we talk the talk and we walk the walk, right? So give them a little taste of the chat room there, Matt.
Right here, let's go. So here's one that just, it was a great example of what we did just the other day. Okay, this is gold, the commodity. I wrote gold, the commodity, because we also bought gold, Barrick gold, and its symbol is GOLD. So I wanted to make sure people that knew that this was, the charts are very similar, as you might guess, but because it does trade off the commodity. But I try to combine a couple of different things. Again, fundamentals are always important, but again, the market is only right eventually. Was the market right in when it was at all-time high in 2007? Of course not. Was Microsoft right in late 1999? Of course not. Was the market wrong? Was the market right at the bottom in 2009, et cetera? All these different examples. The markets get way out of whack with the underlying fundamentals, and that's why we go in and try to take advantage of it. That's how they'll always talk about how Warren Buffett's not a market timer. In a weird way, he kind of is. It's just he's just very long-term market. In other words, when a stock becomes ridiculously cheap, he comes in and when the market is really wrong and has sold down a stock in a major way, he'll come in and buy it at a great price. That's what we're trying to do. We're trying to take place situations where the market is wrong about an individual stock, a group, which we can trade the ETFs, or an overall index, et cetera. But here's what we did, and we combine all these different things. We combine the technical, the fundamental backdrop with the technical, sentiment, positioning, et cetera. Here's a situation where gold, the commodity, had been, everybody's saying, why the hell didn't it, it's supposed to be a great hedge against inflation. It's acting like crap. Well, people ask me in the chat room all year long, is it time yet? Is it time yet? And I said, it's going to work at some point. Not yet. Let's hold off. I've been saying that all year, and I'm not saying, hey, don't worry. It's we went and jumped in, because it happens sometimes when you jump in something in a big way, as it goes down and down and down and down. You keep saying, don't worry, it's going to work. No. I was saying, don't worry, it'll work, but don't get in it yet. Okay, we're going to hold off. I didn't pull a Tom Lee. Okay, so what we did here is, you can see, lower high, lower low, lower high, lower low. I was like, I don't know why it's not working as a hedge, but it's not, and so I care about what is happening, not what should be happening. And because we learned long before, some people say, well, the reason why it didn't work is because the cryptocurrencies were the hedge against inflation. Well, we all know that. We learned that long before the recent times, the recent days, the recent weeks, that it wasn't working. So we came in here in gold, and we saw that it was finally bottoming. Instead of lower highs and lower lows, it wasn't making lower lows. It was building a base. So it came in here and started breaking up. We went in and bought it. Okay. We also have what's called a MACD chart. We'll talk about education stuff later, but because we use a lot of education in our chat room.
Well,
we saw a breakout here. I'm sorry.
Tuesday is really when you shine out with the members. That you have like a 1 hour session or something like that with them, right?
Exactly, and this is the type of stuff we talk about. We had one today, and I've talked about some interesting things today. But we go every Tuesday for about 11:30. We go for about 45 minutes to an hour. God only knows what'll happen next Tuesday. It's Thanksgiving week. It might be quiet, so I'm not going to bore people and ramble on for an hour if there's nothing to talk about. Right. There was one Tuesday in August, everybody's off on vacation, and it ended up being a half an hour call, and we moved on. But we're there we thought it was going to be something to be 15, 20 minutes, and it's just turned into a much bigger thing. Got a lot of questions, and we just talk about the educational aspect. For me to just go and tell you, hey, buy Apple, buy this, buy whatever stock or whatever issue. We go outside of the U.S. stocks all the time and make a lot of money in those. But the point is that we want you to know why we're doing it. What's just going blindly is no good. And besides, you want to learn. You want to know why, how you're making money, so you can make it, on your own the next time. But we're working with each other, and then you can say, okay, Matt, this is something that worked really well 3 times in this year. The same thing's happening now, but you're not recommending it. Why not? and I'll say, I'll either say, oh shit, I didn't notice that. Good point. Let's go in there and buy it. I don't know how I missed it. But more, I say, well, actually, there's something different here, and this is why. And again, you'll learn. But the thing is, you were the one who picked it up, not just me. You were the one who picked it up because you learned over that, geez, every time this happens to this particular group or this particular stock or in the market overall, this is how we should be thinking. And then again, you bounce it off the people. Hey, this is something I've seen a bunch of times. It's happening, and I'll say, well, be careful, and you learn from that. So it's very. And so we came in here, and again, we took the fundamental aspect of gold should be a hedge. Then we took it finally broke above its 50-day moving average. See that yellow line? Finally broke out. So we bought a little bit here, got more aggressive, and the stocks, and you see how gold's had a nice run. So these are the things that we're working on all the time.
Right. And we're getting a lot of questions here about the live room. So we're just going to get this out of the way and get back here to the sesh. By the way, thanks a lot for sending these questions. These are from you, the viewers. What is the chat room schedule? So the chat room schedule is Monday to Friday, 9 to 5, but it is open 24/7. It is a fully international community. We have people from all over the world. I've signed up people from Nigeria all the way to Finland to Ukraine, everywhere. So it's a fully international community. Anybody can join from anywhere in the world. Let's see, next question. What is the price at renewal next year? It's going to be the same. It's not going to change. It's the 70% off that we have today. Let's see, is this for small accounts or large accounts? So the calls and puts that Matt is buying, these are $1 around there or less. So these are not crazy expensive calls or puts that you're buying. Does Matt provide education? Yes, a ton of education. Every time that Matt provides a trade or anything like that, he gives full insight. We are trying to do something different here. We're not just trying to give you a trade and that's it. There's a lot of learning. That's a big focus of what we do here, of what Matt does. He's really good at it, and in the sessions as well. Next question. So the session is on Tuesday, 11:30 till about 12:30. And that really started as a 10-minute thing. And then Matt expanded it and turned it into a longer session out of his kindness to be there for his members, right? I've been here for 2 years. I launched the chat room with Matt. He's always been consistent. He's always letting his members know, hey, I think there's a correction coming, lighten up on stocks, and just try to raise cash at this point. So yes, let's see. Next question. Okay, yeah, so as far as the strategy, Matt has been, as he mentioned before, he's been trading for 40 years, right, at the highest level. So he has developed his own way of trading. And at the end of the day, his gut instinct is a lot better than a new trader's gut instinct, if that makes sense. So you're getting a lot of the experience, you're getting all the experience. So that's the one thing you cannot buy in life, but you can actually take advantage of Matt's experience and trade with him. All you have to do is mirror his trades. He's going to give you entries, exits with a timestamp. It's as simple as it could be. I'm buying TQQQ calls, $21 strike price, expiration November 30th, something like that. It's pretty exact. It's not like, hey, I'm feeling bullish today. He gives you an exact contract to buy. So yeah, that covers the questions there. And okay, Matt, so you're showing us the spot SPX.
Well, yeah. Oh shoot, I just erased it myself. But before we do that, because I want to go back to the thing that you mentioned about experience and gut and stuff like that, I want to show you a great trade that we did, and we've done a lot of these trades this year. But let's see if I can find it here. I'm going to go back. Boom, boom. Sorry. There we go. Okay. What happened? Whoops. May, April. Whoops. May again. But what happened this year, and we'll talk about that in a few minutes. Oops. Okay. What happened? Remember, we saw this cryptocurrency market is just falling apart, right? Well, what happened in the spring? We saw a crash in the crypto market, right? Well, what did we? So what we did, here's this. I'll blow it up so you can see it better. Again, it's just from my experience. I just knew, and again, my gut. But people were saying, what the hell is going on with Apple Computer? The stock went down 10% in a week. No news out. No negative news. I mean, Apple can go down 10%. It's gone down 20% many times, but there's usually no reason for it. I mean, either the overall market does something, but I'm like going, wait a minute, stock market's going down a little bit, but crypto's getting crushed. What does that got to do with Apple Computer? Then it dawned on me, because I knew that the crypto market, they were getting margin calls, and I knew that there was no way that the crypto market was liquid enough for them to sell enough cryptocurrencies to meet their margin calls. So they had to be selling something else. And I said, well, what do they own? They sure as hell, these guys own Bitcoin. You think they own General Electric, General Motors, 3M? No, they own Apple. And that was the only, I said, as soon as this forced selling, as soon as these margin calls end, we're going to get into Apple. And sure enough, and on the 11th, the cryptocurrency stopped going down. You can see down here, see May 12th, right? So the cryptocurrency market did nothing, went flat, and yet Apple went down further. I said, okay, this is time. Let's take advantage of it. We came in at the end of the day. I said the exact trade. We're going to buy the April, May 13th, $143 calls. We bought them at about $315. The next day, by 11 o'clock, they were up over 400%. Why? Because the selling pressure had finally gotten off, and finally people just said, oh no. And the stock was not down for any fundamental reason. It was down because of this. It was being used as a source of cash. That's just my experience. I knew that. I saw it. It's something I learned in the late 1990s, believe it or not, when long-term capital management went under. And again, I didn't get the exact top. I left it there purposely so you can see it. I didn't. Oh boy, you could have gotten 500%. If you get 400% return, so 5 times your money, and you're mad at yourself because you didn't get 5.5 times your money, don't do this. You will drive yourself nuts. Okay. I didn't get the exact bottom, didn't get the exact top. We got 400%. I was very, very happy. And so were the people in the chat room. So these are the types of things that
right.
Again, that my kind of experience gives you. I know, pat myself on the back. It's there. I mean, it's not people make some stuff up and said, geez, I went out golf and I shot I shot a 72 where they really shot an 82. And everything's it's time stamped. We know what happened.
And folks, just for you guys to know, Matt has the record at Benzinga for the highest percentage gain. And I think it was about like 8,000%. And before that, Matt had the record with like a 2,500%. And some people made way more because the stocks kept, going in Matt's direction. One of them was shorting Viacom, and the other one, man, what a call, dude, that Viacom, man. And they did an offering after hours. And then the other one was the FXI, which is a Chinese ETF. So, and this is really kind of, I just want to, touch on this really quick. A lot of the people you see on the news are like, equity strategists, they're only focused on US equities. Matt is focused on global equities. So he is finding opportunities, outside of the US that you can trade. You don't need to, even on the dollar, you don't need to, find a Forex brokerage in the Bahamas or nothing like that. You can do it all with Matt. So Matt, maybe you can expand a little bit on that.
Yeah, it's like I said, I mean, FXI, which is the, you can see up here at the top, said the FXI China Large Cap ETF. It says last weekend's chart. It was last weekend's chart when this thing was taking place back in March. And it's like, 10 years ago, like I said before, it's like, if you weren't a institutional customer, you would have to try to find some broker in Hong Kong who would do a trade for you, plus do the currency swap for you. Who's got time? And at 2 o'clock in the morning. Instead, we went into the FXI because we have the tools now that we didn't have before. And these things are very liquid. And the FXI is very, very liquid, trades millions of shares a day. And the options are pretty liquid. And this is what happened. I mean, we just saw this thing. It was just getting crushed. It was going down and down and down and down and down. And again, I just used my experience. I used, hey, don't buy it. There's some trades in here, but this is what's called an RSI chart. For those who've never seen it, relative strength index. And it's a great indicator for when a stock is oversold. See, when it gets down below this green line at 30, that means it's getting oversold. And sure enough, when it got there, it bounced for several days, for a couple of weeks there. But here, it got down ridiculously oversold. Remember when President Xi, he was, just bashing every month. He'd bash a new industry in China. But then this year, beginning of this year, it got much worse when the and it wasn't the the Chinese government, was us. The US, the SEC came in and said, we're thinking about delisting some of your companies, and the market got crushed. So they not only say, hey, we can knock down our own market. We won't like the U.S. knocking down our market. And I saw this thing. I was like, this has got to be a screaming buy. Number one, because China is going to, if the China will use every penny they have in the government to buy this market back because they want to save face. They don't look back. But besides, they want to, they don't want their stock market to fall out of bed. Whether they got blamed them for anybody else. Okay. But they're a communist country and they can just make sure it goes up. So I knew from the technicals, it was ridiculously oversold using the RSI chart. And then I knew from experience that China would go in and buy those stocks themselves. The Chinese government would manipulate the market higher. Well, sure enough, the next day, huge rally, up 27%. That's like the Dow Jones Industrial Average going up 27% in one day. How's that? Thank you very much. Well, on the 15th, like I said, we bought the March 18th, $30 calls. We made almost 3,000% by 11 o'clock, 10:30 the next day. And I was like, I know this is going higher. I know they're going to buy more, but you have to be intelligent. You've got to have user risk management. You're up 3,000%. Okay, so it's 30 times your money, or actually more than 30 times your money. And it's like, we've got to take some. So but I think it's going higher. So we sold half, and we let the rest of it go to the end of the day. Sold that up almost 8,000. So we're over 5,000% on the overall trade. Some people held to the next day, made as much, at least they said they've made as much as 14,000%. I can't take credit for that. It's certainly, it did go higher enough. They certainly could have, and I'm sure they did. There's no reason for them to lie. I just can't take credit for 14,000 because I did sell mine at the end of the day, just staying. Again, I was using risk management. And believe me, if I made 5,000% on the trade and some people made 14,000, I didn't lose 1 second of sleep over that. I missed all of it. I just can't. These are the type of home runs that Grand Slam home runs. You just pat yourself on the back. If you're worried that your neighbor or somebody else made slightly more or even made a lot more, who cares? You made a lot of money, and 99.9% of the people made zero on it or lost money. So that's what we're trying to do. We're trying to do, again, risk management, so that it's because we've had things that have gone up a couple 100%. And then at the end of the day, it's flat. And you're like, holy cow, I had something up 200%. You think about it. You think about 200%, that's, 20 times your money. No, 100%, okay, is say that's double your money, right? Let's say, so that's double your money. Okay, 200% is triple your money. 200% isn't double your money, it's triple your money. So if you have 300% and you've tripled your money in 1 day or 2 days or 3 days, that's pretty damn good. That's what we're trying to do. We again, when we do these ones that it makes several thousand%, we had the Viacom where we made 5,000. Again, same thing. We sold half of it at 2,500%, half of it at 5,000%. But I showed you the one where we made on the Apple computer. Here's SQQQ back in April, and we do it on a consistent basis. Here's 600% back in April. Okay, whoops. Shoot, what did I do? Okay, there we go. Okay, but I'm going to show you how we, May. So here, May, 200% on some QQQ calls. May, now it says May. Again, boom, 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 100%, whoops, over 100% on the, again, I'm going in May. Sorry, gosh darn it, I'm sorry. There we go. There we go. Just now we get into, okay. Well, there was that Viacom. Remember that I told you about that Viacom trade? See how overbought it got? That's where we made our 5,000% because it got ridiculously overbought using technical analysis. I was like, that was during the mean trades. But here again, in June, 140% on some AM. So it's specific stocks. These TQQ and TQQQ, SQQQ, they're the leveraged ETFs on the QQQ. Here's something else. XLE, I've been bullish on oil since October 2020. Beginning of June, I said it's had its run, it's coming back down. We're going to buy the puts. We went and bought the XLE. June 17th, $90 puts. 3 days later, we sold half of them up 400. And I'm sorry, we sold them up 500%. We sold the other half up 470% for about a little over 500% win on a 3-day trade. And I guess, again, I'm just showing you how we did in wheat. I was like, what the hell are you doing? Wait a minute. So you're doing an FXI in China, you're doing AMD, you're doing Apple Computer, we're doing it on commodities. Wheat, remember how all these commodities took off during the spring? They crashed in the early summer. They got way oversold. We came in and said, again, do you have a broker on the Chicago Board of Trade? No, we don't need that anymore. That's what you needed 10 years ago. Now we just have the ETF, WEAT ETF. We bought the July 15th, $9 calls, up 250% in 3 days. But I just, show you TLT. These are the 200 and some odd, 240%. TLT is the bond ETF. LABU, here's one, 800%. When the LABU is a 3 times leverage ETF on the IBB, which I'm sorry, on the biotech ETF. 3 times leverage. Their options are actually active. Look at this in 1 day. We made 800%. Not all of them make costs, but again, I'm just trying to show you that we've done it through. Here's September, 250% in TQQ. UUP, we made 100%. Those are the dollar options. That's the dollar bull options. And on and on and on and on. So my point is, and not all of them make hundreds of percent. Here, TLT, we made 53%. Didn't get the top. But look, we still sold at the right time, because look how they fell out of bed. We would have lost money if we held them on to the end of the day. So I kind of went through that quickly, but I just wanted to show you that this is something we've been done on a consistent basis all year long. Certainly we've had good weeks. We've had exceptionally good weeks. We've had some weeks that we didn't make so much money. Weeks where we've lost money. And certainly days where we've lost money. If anybody tells you they're batting 1,000, they're lying through their teeth. But the point is, we don't want to be Major League Baseball superstars. Okay, Major League Baseball superstars bat 350. That's unbelievable. You're going to make $250 million if you can bat 350 in the major leagues. The problem is, in the stock market, if you're only batting 350, you're going to lose money. Okay, so we're looking to bat 600, 700, really more than 600, 700, 800, and then and cut, to try to manage it. I mean, like today we had a loss in the XRT. I said, let's just get out of it. Let's move on. We'll go to the next thing. And let the winners ride, make some nice money. And so that if you're batting 600 or 700, and those hits are triple, because you're in the options market, are doubles, triples, and home runs instead of bunt singles. The batting 600 is like batting over 1,000, because you make so much more than you lose on the winning trades. So again, like, if you're just in a stock trade and you bat 600, that's great. Ones you lose, the ones that go up 20%, ones go down 10%. Okay, great. The ones that go down, well, the worst you can lose is 100%, right? You can make way more than 100% very quickly, as I've shown you in the options market in volatile times like we're in today. Right. Sorry to keep rambling there a little bit, Rodrigo, but I just get an idea of what we're doing, and it's gonna. I'm telling you, it's gonna stay. The elections, behind us. It's even the people who are really, really bullish right now are admitting that we're going to have. There's still going to be a lot of volatility, and so the key is we want to be able to make money in both directions, and with the options that we have today, we can in both directions, and we've done it in the same stocks or the same ETFs in the same week. We've a couple of rare cases we made in the same day, where we bought some calls, made money on those, sold them, switched to puts, and made money on those as well. That doesn't happen very often, and you start doing that too much, you whipsaw yourself, you drive yourself crazy. But sometimes. Right.
So Matt, what do you attribute to your success in this, in the Matt Maley strategy that you do? Like, how were you able to? I mean, you're 40 years in Wall Street, but what really kind of do you think is the reason for your great success in the chat room? It's up over 300% since we started. Right. What do you and you don't go all in on any of these trades? So what do you attribute that to?
Well, that's part of it is risk management. I mean, we don't want to be these people. Geez, you hear every once in a while. I hear, geez, I lost my whole portfolio and I had 3 trades. I'm like, whoa, what? That's not, at least and I kind of say, hey, I'm going to do this one small. I'm going to do medium. I never. I say never. Very rarely do I put more than 10% of my trading portfolio. And I have a trading portfolio and a bigger bucket portfolio for that real long-term stuff. And that's where my cash is sitting. Or well, I shouldn't say that. I have a bunch of cash in that one for my long-term, but I obviously have cash in my trading account as well. But the whole idea is risk management, and I never, and I say almost never, put more than 10%. But I mean, at 10%, it was like, well, look at that. You make 500% a return in a couple of days on a nice play. Yeah, boy, if I put 100% of my money into it, maybe I'd retire already. But man, it's hard to sleep at night when you put 100%. And people do. Again, I just been doing this too long to make that kind of bet. Every once in a while, I will go a little bit bigger. Just I have a real. I mean, I have a high tolerance of risk compared to some people, but probably to most people. But yeah, don't be betting the farm. And you can start real small in this stuff. You don't need tens of thousands of dollars. I mean, you can do this with you can do it with $1,000. I mean, and you can do it with a couple $100 to get started. You start maybe with a paper portfolio. And when I say paper bowl, you just write the thing down on a piece of paper. Okay, I lost money there, I gained money there, and then when you actually do some trades, there's nobody's a trader. Nobody is a real trader until they've lost money on a trade. And like I said, anybody who claims they haven't lost money is just lying to you. And everybody's had bad losses. I mean, say bad losses on a percentage basis. That's what the whole thing is, that if I go into, and I've had stocks, I've had plenty where I've lost 100%. I just let it expire worthless. But I didn't care because it was a small little trade. I was like, hey, I've got this bullish side, bullish bet on, this is on here. I want to buy a little bit of protection. So I'm going to spend a tiny amount of money, buy some calls, just in case that thing reverses on me, because I know that if it'll hedge it up, because the options can go up several 100%, and I will have my money hedged. And all of a sudden, I was like, okay, great. I had a 10-to-1 thing, and this 10-to-1, my bearish bet doubled, and my 1% 10-to-1, and it went to zero. Okay, who cares? I made so much money on that. It was just a hedge. So, but those are the little ones. If you did the exact number of how many winners versus how many losers, we still got a lot more winners than losers. But the number of small losers, it's like, I don't care. I knew I would probably lose money on that. I just wanted to make sure I took care of myself. But again, I'm kind of getting off topic here. But the point is just being intelligent about it, not betting the farm. Because in the options market, if you are somebody who works at a company that's really coming and you really believe in it, and you say, I'm gonna buy a lot of money. If you did that at Microsoft and you were there in the 1980s, you just kept buying because you really knew it was going to do well.
Right.
That's great. That's fine, because you really believe in it. You're there. You're seeing the company. You see how it's growing every single day. That's great. But other than that, to back up the truck on anything, it's unless you have inside information. And if you have inside information, don't use it, because we don't. Well, you're going to jail. You don't want to do that. I mean,
and Matt, and I know that you have hundreds of members there. Obviously, we don't want anybody to trade alone. Can you expand a little bit on that, please?
Yeah, I mean, I mentioned a little bit earlier, but it's like so many people come in and ask, and I've said some things that I respectfully disagree. I mean, the other thing too is and we all do it. I get worked up sometimes. It was funny to today's chat room. I was telling people I was worked up about one issue, and because I just thought, and the person that I was asked about an issue, and they said this person believes a certain thing, and I totally disagreed with it. It wasn't so much as like, we can agree to disagree. That's not a problem with that. But the guy's such I see him on TV. He's such an arrogant guy. Thinking that anybody who disagrees with me is an idiot. And I'm like, he's been wrong so many times. I don't know how he could be so arrogant. We've all been wrong plenty of times. It's like, well, anyway. But the point is working with each other. And people have questions. Like, I mean, there was a time they were asking about how can I buy VIX options in I think it was Robinhood, and I was like, I don't know. I'm not in Robinhood. I'm no help. I don't know. People are like, oh no, this is what you do, and you can buy the VIX futures, the options on the VIX futures. I just was I didn't know. Again, I'm not. If I was their financial analyst, I would have gone and find out. But I'm not. Again, I'm here to help people try to make money trading. I'm not their financial analyst. I won't be your financial analyst or financial advisor. I'm sorry, financial advisor. But trying to help you make some decisions about an active trading account where you can make more money. And we're constantly talking to each other all day long. Hey, I like this. Hey, I like that. And sometimes somebody will say something, and I'll be like, I don't really agree with that. Or they'll say to me, hey, Matt, I'm not. And I'll be like, oh, you know something? that's not what I meant. I mean, I could see, it's like, first of all, maybe they just read it wrong, but more likely than not, I wrote it in a way that wasn't clear. And that's, that's how you learn. And that's how I've been doing this 40 years. I learn something new every single day. And you can really, people are looking out for each other. People want you to, because this is not a competition. There are people, you work at at certain companies, and you're like, hey, if I'm running money and this guy's running money, there's only a certain amount of bonus pool, and if I beat the hell out of that guy, I'm going to get a bigger piece of that bonus. Okay, for us, we're all going to do well. I mean, it's like no, there's no bonus pool. It's everybody. Again, it's the money's out there. If we lose together, we say, what did we do wrong? What did we miss there? But it's not like you don't gain anything by beating somebody else, like you might. And I hate to say it, but you're in a job. It's like we want our division to do better because we have. It's like for us, we all want to do well because we're all we don't. In a lot, I hate to say it, but in a lot of areas of life, it's just the way the world is. For you to win, somebody has to lose, and in this game, at least with our thing, I guess somebody will lose, but it's not us. We're working with we're a team. I guess is my point. We are a team, and we're trying to help each other. It's like the old movie Patton. Your job is not to lose, go out and give your life for your country. Make the other poor son of a bitch give his life for his country. All right. So what we want is to make money, and if somebody else loses, that's fine because they're trying to trade a loan or they're whatever. I mean, we're not trying to make anybody paupers. We're just trying to. There's just so many people making money out there. For so many years on the professional side of things, by taking advantage of the individual trader, let's go back and kick them in the teeth a little bit. They're having a tough year. We're having a great year. So, or many of them are having good years. But that's really. I mean, trading alone is just really too tough. I mean, again, long-term investing, a lot of people, they have their financial advisor. Some people have more than one financial advisor. Some people have, they give part of their money to one person, part of the money to another person. Michael Bloomberg, it's funny, he's worth 40 some odd $billion. I think he doesn't give any more than 3% or maybe 5% to any one guy. Right. So he's got people running all over the place. Here's what you want people helping you do it. If you're doing it all by yourself, it's just so tough, so tough.
Right. Matt, so, let's just have a little Matt Maley segment here. What's on your mind?
Well, we talk about what's going on right now. We talk about the S&P. I started to write that up, and I was going to start with this at the beginning, but somehow I got on a tangent. Can you believe I got on a tangent? Usually I stop talking for, no, actually I never stop talking, but hold on a second. Let me just pull this up for you. Let's see what's going on right now. So, it was funny because after that news came out this morning with the better than expected PPI, producer price index, better inflation number, we thought, oh gosh, this market's going to go right through 4,000. That has been the resistance level for a couple of days. Whoops. And the next stop is going to be the 200-day moving average. And this market is continuing. Well, of course, it didn't. It got above it for a little while. But this is what I'm looking at right now. Again, 4,000 is a big round number. It's not as important technically as you might think for most technical analysis, but you can see how, and I draw these circles. I won't do it now, but I'll just show you here. See this purple line? That's the 200-day moving average. Now, why do you care about the 200-day moving average? Well, it's just something that a lot of people look at. Some people look at the 50-day. Some people look at the 150-day. But again, you have to look at what works for an individual. For the individual indexes and stocks, different lines will work at different times. And that's why you look at back in history. But see this here? You think the 200-day moving average isn't important? It got right to it, and then fell 20%. Boom. Okay. So what's going to happen this time? Is it going to get to it? Number one, didn't get to it in here, right? And if it does, we'll go right back down, or will it finally break out? If it breaks out, that's going to be bullish. especially at the end of the year, all those institutional guys are going to have to go in and keep buying. Even if they think the world's coming to an end in January, they're going to have to buy right up until December 31st, and then they can dump on January 2nd. But see how, again, trying to talk about educational aspects. The 200-day moving average, it got above it here, right? Broke below it, got above it. It's like, well, that's not that important. Well, here, you see how it got a little bit above it. Whenever you get to a key support or resistance level in the technical aspect of things, it's never the exact level. It frequently goes a little bit above it on a resistance side, frequently a little bit below it, or sometimes it stops just before it gets to it in either direction. Here it was where it got a little bit above it. Okay, this is just very early in the bear market, right? Got a little bit above it, but each time it couldn't quite make it, failed. Finally, this time it couldn't even get above it and roll back over. Then it got exactly to it, rolled back over. We're getting very close here. I think a lot of people that it's going to get there. I'm not sure it's going to get there, but a lot of people look at that level, but I guess my point is keep a very close eye on this. If you can see the purple bar there, 4,076. So that is the resistance level. It's also the trend. It's also very, very near where the trend line from the I'll draw it for you here so you can see it. Oops. See how that trend line goes down? See, it's a little bit of that. So if you get above that, right, that number is more closer to 4,100, that trend line. But if you get up in here, okay, because you want to be able to break. See, again, lower, low, lower, high, lower, low, lower, high, lower, low. Actually got a slightly higher high, but not above this one. Lower, low. Can we break above the trend line? That would be good. If we can also make a higher high, I'm going to have to reassess my bullish stance if that happens. But that's why we use technical analysis. And the other thing too is important. Technical analysis is based on fundamentals. At least people say it's just a bunch of lines drawn on a chart. And you think about it, I mean, it's again another thing for individual investors to get a feel for what's really going on in the big world and in the big investment world and with the big shots. And all these hedge funds and mutual funds, they've got armies of analysts. And so they come in and they get the news in advance. And again, it's not insider trading. They're just doing hard work. And some people, I guess, do get insider trading. And when they do, they get in trouble. But a lot of it's just good hard work. You go in and you say, hey, this XYZ company has had a tough couple of years, stock's down, but now I see that their business is getting better. I see that they've hired some new people. I hear, you see that I'm talking to their customers. Their customers are want to buy more product. I'm talking to their distributors. Their suppliers. I mean, our suppliers are getting more orders from this company. Things are turning around. Okay. However, we all know that it's going to take a while for them to hire all those people, train all those people, produce the product, and sell it. So their earnings aren't going to turn up tomorrow. They're going to turn up 6 months from now, 9 months from now, a year from now. So that analyst goes back to the portfolio manager and he says, this stock is going higher. It's not going to show up. But if you wait for why wait for it to get to go for the earnings to come through? I'm telling you, it's going higher. Let's buy it now. And it starts moving higher before the news comes out. And that's why we look at this stuff. The same thing happens on the way down because things start to turn over and you hear, before they lay off people, because nobody wants to lay off people. I mean, we're all human beings. They don't want to lay off people. But you see, geez, I've been talking to suppliers and their orders are way down. I've been talking to their customers. Their demand is way down. We have all these different things where that they see in advance and it starts to roll over. That's why that's why the stock market, we always hear about the stock market moves 6 months in front of a recession. It comes out of it 6 months before the bottom of a recession. Same thing with individual stocks. It tops out before 6 months before the business tops out because all this stuff happens in delays. And so that's why we follow technical analysis very, very closely because it really is based on fundamentals. And I know a lot of people don't want to like to, a lot of traditional analysts say they don't look at it, but they're lying. But most of them really do. I shouldn't say lying, but most of them look at it a lot more than they admit to. But I'm telling you right now, all the big hedge funds guys, all the big active traders, all of them look at it very closely. I'm not saying they base 100%, even close to 100% of their decisions on technical analysis. Nowhere near it. But Stanley Druckenmiller and Paul Tudor Jones, and you name it. I mean, all these top hedge fund guys, they all use technical analysis very, very closely, carefully, because it's fundamentally based and because it works. And it's not perfect by a long shot. If it was, we'd all be rich. But it is helpful. It's just another tool that we use in the marketplace. So yeah, so that's really how that all works. What are we doing here? How are we doing on time? Okay, good. Sorry.
Yeah, no worries. Let me know how you're doing with time.
Yeah, we're doing good. I do. My doctor says I can't. I'm not supposed to sit for more than an hour and walk around with my hip. But we can go. It's been more than an hour. That's fine. We got plenty more time to go. Yeah, we'll wrap up at some point before too long. But again, a lot of stuff going on in the marketplace. So I'm more than happy to keep talking about it. Besides, my hip feels a gazillion times better than it did 2 days ago. So
that's good, man. We definitely need you in the chat room. So also your 40-year anniversary is coming up, right? The 29th?
29th of November, 40 years. Yep. 40 years on Wall Street. And so that'll be a big day. And yeah, it's funny. How things have changed over those years. And that's one of the things, though, is that there's a lot of guys have retired or been pushed out or whatever. It's big, and a lot of it had to do, they didn't change with the business. I have, and it's still something I'm very passionate about, as I'm sure it comes through. It's a great business, and this is an incredible time because there are years where the market really doesn't do a whole lot, or at least certainly big patches where the month doesn't do anything. And if you can't make the market move, but when it's active, and like I said, we're in a situation where we're going from this massive level of liquidity. It's going to be drained out. If they drained it out all at once, the whole system would implode. And they're draining it out, even though it seems like they're doing it very aggressively, they're doing it relatively gradually. And they're going to do it. It's going to take time, take a couple of years. That means trading over the next couple of years are going to be great. And those of us who profit from it, when the market finally bottoms and everybody else has said, I give up, I'm out, I'll never buy another stock as long as I live. And we're going to be loading up to stocks to the gills. And as they go up, we'll still be buying. And we'll all retire earlier than we thought we might.
Yeah, we're all looking forward to that, man. And so what do you think about energy overall, man? Like, do you see is energy just going to keep ripping? It's so crazy how it went negative, like oil went negative.
Oh, that was
like, would you be able to buy it?
You've seen it all, right? And you go, wait a minute, I've never seen that. Went negative. And I'm like, I'll never forget when it was getting close to going negative. And I was like, well, how can it go below zero? And then I read this article about how it could. And I'm like, okay, I guess so. And I go, I don't even know how the hell to trade this. And it was crazy. But anyway, to answer your question, oil bounced in a big way today because of this whole stuff that's going on in Ukraine. And we'll know more. I mean, maybe something's happened since we started the Zoom call, this webinar today. But I usually see it would have been a big headline if there's something big happened. And again, I'm not calling for a major crisis to develop overnight from this. But what I am saying is that this is natural gas. This is the chart on natural gas. And what I'm watching here is, and it's just, there are stocks like Cheniere Energy and Kinder Morgan and EQT Corp. See how the 200-day moving average, again, it just was riding this again, that's the purple line. Now, let me get rid of it. I don't know why the volume chart's even up there. Volume's important, but it's not for our purposes of what we're doing. See how it just rode that? It kept bouncing around, a little above it, a little below it, shot up for a little while, but finally when it pulled away, it rallied a big way. Came back down, slightly below it, held. Nice rally. Now it's come back down, held, but broke. Okay, now it's coming back up, and it's coming here. Now, I think this whole thing that's going on with Europe is going to be a big problem. We've had a warmer than expected fall here in the Northeast, which is heavily dependent on natural gas. So as we go into the colder months, I see when this thing breaks above its 200-day moving average, we're going to be buying those stocks, and we're going to be buying UNG ETF there. We're going to buy BOIL, BOIL. In fact, we were talking about buying BOIL today. Not buying options on BOIL. That's the 3-time levered ETF. So you got to be careful. Some of these ETFs don't have the options just aren't as they are somewhat liquid, but they're a little dicey. And I'm not confident enough yet, because what if people have asked me in the past, hey, what about options on this? I go, I think it's going a lot higher, but the options are completely illiquid. They could go up 3,000%, but by the time you sell them, they'll lose money because they're just not liquid enough. So you need to be careful. This one, BOIL, BOIL, but that is the 3-time leverage. That's okay to buy it now, but you want to buy it. What you do is you buy a little bit now, and then you add to it when we get the confirmation for breakout above the 200-day moving average. But my point is, I do think that the situation in Ukraine is not going to get better soon, and they'll talk about it, and there'll sometimes we hear things, but I don't pretend to be an expert on this, but now I'll tell you, one of the greatest things we had this year, we really made some nice profits in the first quarter of this year, is that people in the chat room live in Eastern Europe, and they were telling us what they saw, what they were hearing and seeing, and we made some great plays off of that. And it was interesting. One particular guy talking about Putin, and I learned so much from him. And I, based on what he said, and more I've read and more I've talked to these experts, I just don't see him backing out of this thing and anytime soon. He's not looking for the way out yet. He's just because, a lot of different reasons. But now we're starting to see reasons to think that that's probably true. Let's face it, Putin, they're having the G20 meeting, and all these leaders are in Singapore, I believe. They're all together, and Putin's lobbying. Forget about that. Something ended up in Poland. Maybe that was a mistake, but he is bombing. I don't know if you've heard, but that just kind of got lost in the sauce. He's bombing the hell out of Ukraine the last 2 days, right? While these other leaders, he's basically sticking his thumb in people's and other leaders' eyes, saying, "Yeah, you guys are off doing that." Well, I'm, usually you say, "Hey, we're gonna have this big meeting. Let's calm things down. We don't want to be having big issues like this during a big conference." He didn't care. He's like, stick it to you. I'm going to be bombing. And to answer your question, then crude oil is getting, we'll see if oil goes up. The XLE is getting a little overbought, which is the ETF. I showed it earlier, ETF on the energy stocks. Let's pull it up while we're talking.
Yeah, and I just got a little news notification here from my Benzinga stuff that the Kremlin spokesman says he has no information on incident in Poland. So this is ongoing, basically.
Yeah. If they really wanted to turn down and say, and it certainly happened in the past. They said, we shot it down. Like airplanes have been shot down. They said, we swear it's a mistake. And cooler has prevailed. And in some cases, it wasn't by mistake. But at least they claimed it was by mistake, so that they could get it. So things didn't escalate. Russia doesn't seem to be going out of the way to keeping this thing from escalating, at least a little bit. I don't want to, the missiles of October, which was, when John Kennedy and the missiles in Cuba. I'm not old enough to remember that, but I did study it in high school and college because all of my professors had lived through it. It was one of the biggest things in their lives for people. We really were on the brink of nuclear war, and. So I'm not saying that, but this is just, again, what I said earlier, all these other, what we're saying from the West is saying, hey, Poland's part of Warsaw. Poland's part of, I said the Warsaw Pact is part of NATO, and you don't mess with them. If you mess with them, you're messing with us. Nobody's saying, don't worry, I don't think Russia really meant to do it. They're not, it's just a slight escalation, but again, we're walking out of a situation where just a short time ago, I'm going to pull this up here. A short time ago, literally late last week, people were saying, "Ooh, it looks like things are calming down." No, they're not. Okay, it just doesn't. Again, I'm not trying to say they're escalating through them, but here, see this double top. It's trying to break out, but see how it's overbought. See that RSI? I'm getting a little worried about that. So this, I love these stocks longer term. I just don't want to be chasing them in a big way. So we're not really chasing those. I like that because the natural gas is down a little bit more, and the natural gas stocks are back down a little bit more. So those are the ones I'm looking at more now. I'd like to see a little bit of a pullback. What happens is, one of the rules that we learned in technical analysis is that when you get to a resistance level, higher highs and higher lows are good. Lower highs and lower lows are bad. Well, a higher high is going to be good, and it's actually made a slight one here. But what happens frequently is that when it reaches a resistance level, when it's very oversold, it's very overbought, it tends to take a breather, digest the gains, work off that oversold position, and then punch through. So I am looking for a punch through here. I'm still bullish on the group, but I think that it's going to be it might take a breather. So I'm not saying I'm not telling people they should sell into their energy stocks. I'm not telling people they should buy puts on energy stocks or energy ETFs. But I'm not recommending buying them, but for on a short term basis. If you like them, and again, I turned bullish right in here. Everybody else told me I was nuts to go bullish, and then they all turned bullish. Morgan Stanley, Goldman Sachs turned bullish in here. They were up 50% in their energy recommendations in 2021. I was like, that's really good. They're patting themselves on the back. It's like, yeah, but we were up 120%. Okay, thank you. I mean, that's the key is to get day trading, and that's good. There are people who do a lot of day trading in the chat room, but the key is getting those key turning points. That's where the big money. A lot of people, most of Wall Street, they're trying to catch the middle 70%, and that's smart because they're collecting fees. Okay, bring that money, and we'll just collect the fees. Okay, or they don't make money because you made money in the stock market. They make money because they got your fees, okay, to run your money, okay. So that's but the trick is, of course, the market's going up, people put more money in. So don't get me wrong, bull markets are much better, but they're playing it safe. They want to get that. They don't want to be the big hero. They just want to get that 27%. What I'm trying to do is realistic, I'm not trying to get the exact top or exact bottom, but trying to get those key turning points. I did it in the energy stocks in 2020. I did it in the stock market this year. We did it. I saw what I showed with the XLE, and when we went from bullish to bearish, we made a nice money on that. Apple Computer, when again we talked about why we turned very bullish on a very short-term basis. Get those key turning points. That's where you get the big money. That's where how Warren Buffett became a billionaire. I mean, he's always he doesn't short stocks. He's always got the key turning point. And again, he's got it. He'll buy it over a period of time. But I mean, he bought Goldman Sachs. I mean, Goldman Sachs paid him a $10 dividend, 10% dividend, 10% for 10 years. Okay. On a convertible preferred. So he made $1 gazillion when the stock went up and then he also got paid 10% over the life of that bond to the greatest investment firm in the world. Why? Because, as I said, in It's a Wonderful Life, he kept his head when everybody else around them were losing theirs. And that's actually from Rudyard Kipling, but it's just something that Mr. Potter said in It's a Wonderful Life as well. But my point is that that's what we're trying to do here. We're trying to, again, we're not going to get that 100%. Just playing it safe for that 70%, that's fine for your big bucket long-term portfolio. But if you want to be an active trader, that's what we're trying to do. Because like I said, that 30% on each side and the percentage move is actually way bigger. And if you get it close to the bottom, like I said, there was a difference between making 50% in energy stocks in 2021 and making 120%. And that's what trading.
Yeah, trading is definitely its own animal, you could say. So let's take some tickers from the chat, Matt. In the meantime, whip out your favorite stock. Let me guess, Tesla. And
yeah. So people just give Rodrigo your ticker symbols, and I'll talk about them. And but while you guys are doing that, I will do Tesla because everybody cares about Tesla. And we'll just look at the chart there. Whoops. Let's see here. Okay. Now I'm going to draw this up a little bit. Now we all know what's going on there. Twitter's having their issues, big issues. He's, even he admitted he's spread too thin. Finally admitted this week he spread too thin. So I'm worried about the stock. And we get and again, I certainly don't have all the answers in the world, and I like to listen to smart people. Bernstein has an analyst, Tony Saganagi, who's a very good analyst, and I always, he's not always right, just like nobody is always right, but I always want to know what he's thinking and saying. And he thinks, he said just recently he thinks it could probably drop to $170. I think he's right. And I just want to show you here as I'm kind of talking here, jabbering. But this is what's called, on the technical analysis side, okay, a descending triangle pattern. See this here? See this, descending triangle pattern with broken below it. So I've been saying recently, let's blow this up so you can see it better. There we go. So it did get oversold, but it's working off some of that oversold. And I was thinking, hey, if this stock can get back up to 200, it's going to be a good spot to, make some negative bets on that, maybe buy some puts, et cetera. Because we want to work up and it'll go straight down to that 170 level. I must admit, I've been saying 180, but Tony Saginaw, excuse me, like I said, smart guy, very good analyst. He's looking for 170, so I just want to make sure people know that. That a smart person, that's what he's saying. It's not just a technical thing. One of the issues that they had in the last time is that there's no question there's a slowdown in demand in China for automobiles overall and for Tesla stocks, the Tesla's cars. That's not good. Okay, obviously Musk has been decided to sell Twitter stock. I don't know how much more he has to sell. I'm sorry, Tesla stock, or that he has to sell anymore. But that's immaterial. He's trying to run 4 companies. Somebody else has to run this company, and I am not putting down Elon Musk. I'm not saying anything negative about Elon Musk. I tell you, there was something happened early in the chat room. There was somebody who couldn't believe I was saying something negative about Tesla, and I was like, I'm not saying anything negative about Tesla. Elon Musk is brilliant. He's brilliant. I'm like, I agree, but the stock's going down, and the stock was I think the stock was at 1,200 before it split. I said the stock's going below 1,000, probably going to 800. He said, "You're out of your mind," and he got really mad at me. I think the guy left the chat room, but I was like, I'm just saying what's happening with the stock. Okay, I'm not saying anything negative about the cars. I'm not saying anything negative about the car company. I'm not saying anything negative about Elon Musk. And here's a similar situation. I think we're headed for a recession. I think there's very little chance we avoid one. That's not going to help. We see other automobile companies here in the U.S. having problems, and one of their big growth areas is going to be China. It's going to do very well in the long term, but near term, China is slowing. China's talking about reopening and all that stuff. Maybe they will, but their COVID cases are up, and it's going to be tough for them. You say, well, he'll just open up anyway. He's not going to open up anyway. He cannot do that. And she may be all powerful, but he can't control health. And if this thing, his healthcare system cannot withstand what we withstood in 2020. His healthcare system will fall apart. So that's the real reason. People think he's doing it because he wants to control people. Well, that may be part of it, but he's doing it because he knows they cannot have this. The system, the healthcare system will crumble. And so one thing that dictators can't handle is when you get massive social unrest, you're out and you're usually dead. And I'm very serious when I say that's something that he's smart enough to know that he's not so powerful that he can't be overthrown if social unrest becomes really bad, and that could happen. So again, this COVID thing, as usual, the Main Street narrative and the main narrative on Wall Street, it really isn't the right one. In this case, with China and COVID, has much less to do with control by the government and much more to do with the fact that their healthcare system can't.
Right. Okay. And everybody loves to talk about Tesla. So we got a lot of tickers here. Let me go through this. Okay. So Joseph with BABA, BABA.
Yeah. Okay. Now this one's. Oops. 1 second. Okay. Now, this market's finally getting some. I'm sorry, China's market. Obviously getting some nice. Excuse me here. I little Band-Aid on my finger. Sorry. Believe it or not, I cut myself in my crutches. I used to be an athlete. Okay, here. See the 200-day moving average. That's the purple line. Let's get rid of all these busy lines. Okay. Obviously the stock, but see, tried to flatten out, looked like it was trying to build a base, but then it made a new low. But let's look at this. So it's trying to break above that trend line going all the way back to just the fourth quarter of 2020. Now let's blow it up so we can see it a little bit better. Now you can see it's RSI chart, not overbought. Okay, let's see if this thing can break above that, it's going to be very bullish. Okay, it really hasn't seen a higher high in a long time. It got up here, almost made a higher high, but really didn't. Okay, so what we're going to be looking at, what we want to be looking at right now is, what do you believe in China? Do you think that she's going to really let things go or not? You know, right now it's probably a little overbought because of the big run for the last couple of days. You may want to not chase it for a while, but if you can break above of here, bang, bang, above 86, that's going to be really bullish on a technical basis. Let's look at the MACD chart. Let me talk about. Let me pull it back up. BABA, equity, MACD. See now it's got this positive MACD cross. What that is much like a golden cross, only just shorter term, where the 12-day exponential moving average crossed above its 12-day. That means a short-term trend has changed. That's bullish. So we just got to wait and see. I am skeptical. I will say this on a longer-term basis. I still worry about Xi. Xi is a brutal guy, and he wants to keep control. So I think this will be a good one for a trade, and this thing could go quite a bit higher. But this stock going back to its old highs, I think it's going to be a long time before that happens. So at some point in the coming, in the coming months, I'll probably get back to the negative side of this thing. But right now, the stock's acting real well.
Okay, let's see, and then we have so next one here, NVIDIA.
Well, okay, the NVIDIA, they report tomorrow. NVIDIA, is it tomorrow night? Oh, let's see. Can't remember if it's tomorrow night or before the opening the next day. Either way, it's going to be after the close. Hold on. NVDA, equity DES. There we go. After the market tomorrow. Okay, so it's going to be after the close. Okay, good. Okay, let's pull it up here. Now, we've talked about this in the chat room today. I'm going to probably take a lottery ticket and buy a few puts on this thing. Now, there's a lot of good stuff going on, though. I mean, the stock's seen a nice run, but here, let's get rid of these lines. I'm going to go back. Let's go back to the beginning of 2021. Let's get rid of some of these moving averages. Okay, in fact, we'll get rid of all of them. Okay, now let's get the trend line here, right? Trend line. Bang, bang. Okay, so well, it popped up on me hard. Sorry. So let me get that again. Redraw it. Okay, let's get rid of that one that I made a mistake on. Okay, now this is positive. I mean, obviously the stocks have been acting great, but let's see here. Okay, and I'll do one more here. It's frustrating sometimes. Okay, sorry to be just doing, I don't want to dead time here, but see now you can see that it's already broken above its trend line from last spring, but the more important longer term trend line, it still hasn't gotten up to yet. And what we're looking for is see if it can get a higher high, okay, above those August highs. So the thing is, though, the stock is getting overbought. See how it's overbought on its RSI chart? See when it got up to this red line? Lower. Got up to very close to this red line? Lower. Got up to this red line? Lower. So I'm very skeptical about the stock. And another reason why is that the stock has had, furthered this rally. And let's blow it up so you can see it a little bit better. Okay. Okay. And let's go percentage. Bang. Okay. I mean, it's a 50% rally, okay, in a month. I mean, that's a big rally. Now, it can go higher. It can absolutely go higher. If they report good numbers, maybe it will. But one of the reasons that it's had its extra goose the last 2 days, was because Taiwan Semiconductor, it was announced that Warren Buffett, or at least Warren Buffett's company, Berkshire Hathaway, they don't know if it was him or one of his other portfolio managers, but has bought a piece of Taiwan Semiconductor, bought a position in Taiwan Semiconductor. That's it's a chip stock. So is Nvidia. So that has helped Nvidia rally even further and made it quite overbought. And the reason why I'm saying this is that, if there's been a hedge fund guy who's really good at short-term calls and short-term plays, this is not. Then you say, okay, yeah, the stock's got to go higher. This guy's, he's super, super smart. He's a great trader. Warren Buffett is buying this for the long term. First of all, he bought it. This is a reporting season from 6 weeks ago, so he bought it a while ago at lower levels. And in his time horizon is not 2 or 3 weeks or even 2 or 3 months. It's way down the line, many years. So he doesn't care after this 50% rally. Do you think he could care less if the stock went down 10 or 15 or 20%? He wouldn't care. He'd just keep riding it out. So that would be different. If it would have been a takeover guy, somebody who's going to come in and say, hey, you've got way too much debt. You've got this or that. You're going to, we're going to force you to do things to make your company a better company. So that would be another reason to think, hey, the stock's going to go a lot higher. Here, the stock is only up because Warren Buffett, a very long-term buyer, announced that he owned a stock that is already overbought. So I guess my point is Nvidia is bought a stock in the sector, and Nvidia has gone up in sympathy. And so now it's very overbought. It's not the most overbought it's ever been by any stretch of imagination, but it's overbought. So, and let's face it, everything we've had from the semiconductor sector, every piece of news we've had has been negative. And it's been negative this earnings season, and we got it even before the earnings season started with several people reporting, guiding lower. And we had Micron and people who guided lower a couple of times and still reported lousy earnings. So can Nvidia, after a 50% rally, can it rally more if they report good numbers? It sure can. But my feeling is that it probably won't. That it's got this little artificial boost from the Warren Buffett story on TSM. And so it's too ahead of itself. So even if they report inline numbers, the stock's going to get hit. And if they report poor numbers, the stock's going to get hit hard. So I'm even going to look at some puts in Nvidia. I'm not going to spend a lot of money. It's had this great run here. I just betting on earnings, unless you've got inside information. If you're trading on that, you're going to jail. So I'm not going to do that. I don't have inside information. Every once in a while, there's an unbelievable setup that really just before earnings, it's like this stock's so overbought. I don't care if they announce they've cured cancer, this stock's going lower, or just the opposite. It's like this stock is so oversold. I don't care if unless they announce they're going out of business, this stock's got to bounce. That happens sometimes. This one's getting close to that. I mean, it's pretty overbought. Now let's go back a little bit further. Excuse me. 2022. See how it did get more overbought. Ah, shoot. 209. Sorry. Okay. Okay, now it did get more overbought here, right? And more overbought here, more overbought here. So you say, well, it's got plenty more to run. The problem is in each one of these cases, we had the huge QE program, massive amounts of liquidity in the system. We don't have that anymore. In fact, they're taking it out. So I don't think it'll get to that overbought level. I think it's going to come down. Doesn't mean it can't come down and rally back up later on and break above those trend lines and stuff I was talking about. But I think this is one I'm going to play with some puts at some point tomorrow, probably towards the end of the day. We'll see how the stock trades tomorrow. If we get real bad news, the stock can make it hit tomorrow. We'll have nothing to do with the stock. If we get bad news out of Ukraine, everything can go down. So we'll just have to see. But this is one I'm going to be playing to the bearish side on a short-term basis, simply because 50% rally is a big rally, even if it's going to 3,000 by the end of the year, which it's not going to do. But I mean, even if it's going up 100% in the next year, it's not going to go so in a straight line, and I think it's getting pretty ripe for a pullback. So I'm a little cautious on that one right now.
Okay. All right. And Matt, we've gone over a lot of stocks. We've gone over option trades. We've gone over technicals, market discussions, crypto, Tesla, rates, the Fed. This is a packed sessions, and you do this every day in the live room with the folks. So, guys, if you do want to trade with Matt and have you're going to have that live meeting with Matt on Tuesdays, 11:30 to 12:30, and he's in the chat room the entire day answering questions and all that stuff. We didn't talk much about the retail numbers, Matt. Is there anything you want to add about tomorrow's numbers?
No, we should. I'm sorry. And I really thought about, I got out of it, that my retail, I mean, we're going to see. I mean, these numbers, it's going to be interesting. This is the XRT. Now, what Rodrigo's talking about, there's going to be some more earnings numbers from some retailers, including Target and several others this week. But what he's talking about is the retail sales number that the government puts out every month, and they're going to come out tomorrow morning. If you look at home, especially what Walmart came out with, you would think that the consumer. I mean, the consumer's staying okay because he's putting more money on his credit card. That can only last so long. But look at this XRT. See how it got right up to its 200-day moving average and rolled back over? It got right there again now. It's good now. It's not as overbought as it was, at least on its RSI chart. And we don't just look at RSI, we look at Bollinger Bands, like I said, MACD charts, stochastics, with a lot of, and then of course different patterns, head and shoulders patterns, and triangles and wedges, and we had symmetrical triangles, and rising triangles, all sorts of different ones. I don't get too much into it because, frankly, I think too many technicians make it more complicated than they need to. But my point is here. See how it got right to its 200-day moving average, rolled over. All right, right to its 200-day average, move over. So my worry is it's going to be if it's a bad number. If it hadn't been for today's numbers, I'd be saying, man, we ought to be buying puts hand over fist. But with Walmart, the question is Walmart just taking market share from everybody else because it's a discount retailer, and people who have gone there for years are obviously still going there. And then we have people who haven't gone there, haven't felt the need to go there, now feel the need to go there because their gasoline prices are high and their food prices are high. And actually Walmart is fine. And actually, if you look at it too, Walmart was mostly their food, their grocery business that did so well, not their soft articles and things. So so that may not be so good for a lot of other retailers, because people have to buy food. You can't. That's why we call it stagflation. Prices remain high, but the economy goes down. It's a stagnant economy, but inflation is still there, and because people will keep buying because they. But the dumbest thing I ever heard, I couldn't believe it. Last spring, somebody said, "Oh, the consumers they're spending just as much money. They're just spending in different ways." I'm like, yeah, hello. Of course, that's what they're doing, because they have to spend way more on to heat their home or air condition their home and to put food on the table. And 64% of Americans live paycheck to paycheck, right? Those 64% of the people, if they're spending a lot more money on essentials, they're spending less money going to the movies or going out to dinner, whatever it happens to be. They've only been able to keep that going through credit cards. So I think this could be an issue tomorrow, but we'll see when the number comes out. It comes out before the opening. I'm also hear from Target. I forget the other one as well. But tomorrow could be a very important day in either direction. And when it comes to what's going on with the consumer, there are just signs, a lot of different signs. The consumer is not quite as strong as Walmart's numbers shown, but we'll see that tomorrow. That's going to be a big one. Anyway, I think we'll probably try to wrap things up, just because it's been about 2 hours and I do need to get up and walk around and stuff. But go ahead, Rodrigo.
No, yeah, definitely, man. I just, if you have any closing remarks on the markets and why the folks should join the chat room this week, considering the volatility we're looking towards.
Yeah, I just, look what's going on in the world. I mean, if everything's going to be, even if you think everything's hunky, is going to be fine and work out pretty well, and it's not going to happen in a straight line. And just look at what these smart people have done. Okay. And sort of smart people are doing well. Forget about that. We're saying you have, Jamie Dimon, talking about how the situation, we have a lot more volatility, batten down the hatches. You have Carl Icahn saying that, we're going to go in a recession, could be worse than just a normal recession. Sam Zell saying we have a lot more to work through. Sam Zell, a big real estate billionaire. There's so many smart people. And of course, my favorite thing was Microsoft last year. Sergeant Ainella, what a smart guy. He didn't do anything unethical, but he sold 2/3 of his stock, $370 million, saved himself $120 million because he saw what was coming. He knew his stock was overvalued. He has a great company. He's a great CEO. He's doing a great job. You will never hear me say anything negative. What he did was perfectly ethical. He just decided to cut his holdings. And, when smart money sells, you pay attention. And that's what so many of these smart people are warning us. Jeff Bezos, of course, was the other one this week. Tim Cook, talking about they're going to hire, change the hiring practices. Jeff Bezos saying, don't buy that widescreen TV. These guys, it's some people say, oh, they're just rich people. They don't really care. It doesn't matter to them. Well, yeah, but when they're all saying at the same time, remember Jamie Dimon in 2016, we had a 15% fall in the market. Because that doesn't seem like much now, but back then it was scary because people were like, oh, we're going, are the banks in trouble again? Well, Jamie Dimon came out and said, no, the banks are not in trouble. I'm putting $26 million of my own money into JP Morgan stock. His own personal money, not a company buyback. The stock bottomed that day and went up for 18 months. The stock market bottomed that day, went up for 18 months. Well, what did he do this time when the market was down 15%? He didn't buy the stock. He said, batten down the hatches, the hurricane's coming. And this fall, he doubled down, said the same thing. Basically saying things are going to get tough. Okay. Listen to what the smart people, they see. He sees all this stuff. His businesses are touching all over the world, all these different areas of the business all over the world. He's saying this to screw people. I just don't see that. If he wouldn't have told anybody he bought all that JP Morgan stock. He would have bought it and let it. He would have bought more and kept quiet about it until he had officially file. But the point is, we want to. This is a chance where a lot of people are going to get burned. Like I said, all the best traders are talking to people all day long. This is an opportunity for you to do the same. I'm kind of I'm in there all day long. There's a lot of really smart people and really good people who are in there all day long who are giving ideas as well. Obviously, I was out for a couple of days with hip surgery. That chat room was going. People making some nice money. We're all in it together. It's a team effort. And I just think it's something that's has worked very well, very well this year. I think it will continue to work. And it's just, if you want to be an active trader, and especially if you're not somebody who's been doing it for 40 years or even 10, if you were doing it professionally for a while, those people, believe me, they talk to, I'm sure there's a few, and I know there's a few that just kind of sit in a dark room and trade it. But boy, those, you don't want to be that person anyway. It's a little tough to live that way. But you listen to people throw their ideas off of one another, and you can really, it makes yourself smarter, but not only that, it gives you confidence when you make that money. Because there's going to be a time when this bear market does bottom, where a lot of people are going to be selling. The market rallied for 3 years after the lows in 2009. Money flowed out of mutual funds for 3 years. Okay, as the market going higher. But the people who made money on the way down knew that the bottom was in. They had cash. They had made profits. It gave them huge confidence, and they kept buying as the market went up, and they made a killing. And we're going to be doing the same thing. Thanks a lot for joining us here. We'll be in there tomorrow. We'll have a lot of stuff. We have retail sales tomorrow. We'll get more news out of what's going on with the obviously in Ukraine and et cetera. And we got some more earnings coming out in the retail sector. And then we go right into Thanksgiving week. But after you get after Thanksgiving, then it's the year-end stuff. And there's all sorts of monkey business that goes on then. It's going to be a real exciting, at the very least, an exciting couple of months. I think it's going to be an exciting couple of years. Thanks a lot.
Damn, son, where'd you find this?
All right. Matt, thanks a lot for being here, man. I appreciate you. I will see you in the chat room tomorrow. I'll stick around here. No worries, brother. Good to see you. Hope you feel better.
Thanks a lot.
All right. folks, and I'm going to show you here really quick the live room so that you get a sense of what the chat room looks like. Okay, so once you sign up, okay, you're going to get like a welcome email, and this is where you want to be. Okay, this blue chat room, it's open 24/7. It's open 24/7. We do have an international community, so there's people from all over the world here. So that means that, you know, the chat room is open the entire day. Then now, however, Matt is there from Monday to Friday, 9 to 5. Okay, so 9 to 5 is when Matt is there, and you can ask him questions, and I'll show you where you could do that, and I'll show you where you find the trades from Matt. So in the inner circle chat, okay, really quick, you see there's two channels here. Okay, there's the inner circle chat and Matt's important messages, and then you have these alerts, right? These are sound alerts. So as you can see, if I click this, the bells are not yellow, and if I click this thing here, it turns yellow. When it's yellow, it means that you will have those sound alerts made, right? The other thing is that we are going to be pushing out push notifications. So you will be getting push notifications, not right now. It is in the process of being developed by the coders. So I do want to give a big shout out, of course, there to all the people that make the chat room behind the scenes, you know, Neil, Tammy, Vin, Harvey, a lot of people have put a lot of work into making sure this chat room on the back end is really functioning, and we give you all these features. Big shout out to them. Let's go, baby. All right. The other thing is that Dave, don't worry, dude. You're gonna have a great time, and it's a great community. I've signed up like probably 90% of the people that are in this chat room, and I know a lot of them personally. There's some great folks out there. They just want to, you know, make some money. That's it. This is, consider it like you're taking a new job, right? You have your job, and this is for you to get additional income and educate yourself in the markets and how you can develop a skill set that you will have forever. Okay, because you can do whatever you're doing, and if you know how to trade, you know, you only have to learn once, right? If you learn the right way. So you only have to learn once. You only go through, you know, the toughest time as a trader is when you're starting out, and that's only one period of time. Now, if you're doing that by yourself, your learning curve is probably just going to be like flat, or it's just going to pretty much drop, because sometimes you might be listening to the wrong people or learning things that are not accurate, you know? So with Matt, your learning curve is just going to go skyrocket, like all the way there. And not only are you learning, but you're also making money while you're learning. Most traders will learn, unfortunately, including myself, when I started out, by blowing up your account. And it's not that you want to do that, but that's what happens when you don't know what you're doing. There's a million ways that you can lose money in the markets if you don't know what you're doing. You can get as creative as you want, but Matt's 40 years of experience is really going to help you jump over those things where you're not going to be making those mistakes. Now, back to the chat room. So there's two channels here, okay? You have the inner circle chat where everybody's posting, and I'm just going to show you a couple things here. So Last Mile, what's up, dude? We got Polly Pennies. Peter B, what's up, dude? Peter B signed up, I think it was last week, dude, but great guy. Roy, what's going on? Trading Zone, California Rebel. This is Matt Maley. So as you can see, Matt is it's answering questions. So it's the entire day. So if you have a question, if you maybe want to ask Matt, like, hey, Matt, what is a good stock to buy and hold for maybe a 10-year, like for 10 years out, you know, like something, if you want to put it for like your kids, like college fund, you know what I mean? Like if you do want to buy and hold, you can ask. There's no better person to ask than Matt. There's no better person. Then you can also ask him for stock trade. If you want to trade stocks for the chat room, you can do it. Because we're trading the SQQQ and the TQQQ, and we buy options. We buy options on that. So you can buy the option, or you can buy the stock. You can buy the share, the you know, individually, right? So it's for people that trade stocks. It's for people that trade options. We also trade around crypto if there is a trade to be made, but we're not buying Bitcoin. We're typically trading Coinbase, or these crypto connected stocks. So But again, we're not really like, it's not a crypto trading chat room, okay? But I mean, if there is a trade to be made on Bitcoin, um, you know, Matt is looking at a lot of different things, okay? He's looking at global markets, and the opportunities are all out there. But he has his eye, like as a hawk, on all these things. So he's looking at the yen, at the economies in other parts of the world, and how you can profit from those sectors, from what's happening not just in the US, right? So yeah, just wanted to show you guys that Matt is there, right? And he's going through all of these. This is my homie James Donahue. What's up? Great member. This is basically like a second family to me, like the chat members, right? And I will be there here, and I'm not there the whole day. I'm not even there at all, really, only if I'm making a trade. But I'll tell you something, I never make a trade without seeing Matt's chat room, so that I know where he's at, like how he's positioned. So if Matt Maley's positioned to go long on that day, I'm not shorting anything, obviously. So, and I'll tell you from advice, never trade against Matt, like never take the opposite trade from Matt. That's something that if you want to try it, whatever, but you'll see. But yeah, Matt is, it's very accurate. The gains in the chat room are solid. So as you can see, this is not a news service, but you see that people are posting things here. As traders, we congregate here. It's a workplace, okay? This is a workplace. The chat room is a workplace. People are there full-time. People are there part-time. Some people are there just to learn, because Matt Maley has proven himself to be consistently accurate throughout his career. And that's why he's on CNBC and Bloomberg all the time, because he's probably one of the few people in there that knows what he's talking about. He's not paid to be bullish. And I'll post the link there for you, Ajit. But basically, Matt Maley, all right, let me put it to you this way, okay? Our success depends on your success. If you're successful, that means that the chat room is amazing, right? And that means that we can either go short or go long, where there's no bias, we're just there to make money. That's it. We're not, it's not like, oh yeah, we're going to the moon, nothing like that. If Matt thinks that a stock is going to break down, we'll short it. If he thinks, or the market's going to fall. If Matt thinks that it's going to go up, then, we'll buy calls. So we're agnostic really to which direction we trade. But as traders, you have to do that. And if you don't know how to short, you probably gotten smoked this entire year. And you don't want that smoke. You want to be a flexible trader, right? You cannot be a one-dimensional trader. You can't be a one-trick pony if you want to be successful, right? You need to be able to know like how to short, and it's not like, oh, shorting is bad, or like, no, like it's not like, as a you're here to make money, right? That's it. That's the only reason you're still watching this. That's the only reason you would join the chat room. And that's the only reason why we would want you to join the chat room, because that's the whole point of it, to help you make money with these options. Or if Matt is putting out a trade for stocks, for the most part, it's options. But people have asked him, hey, Matt, what's a good stock that I can swing? Like if you want to swing trade, there's no better person to ask than Matt. If you want to buy and hold, find stocks to buy and hold and build a nice, beautiful portfolio, you can ask Matt, hey, what's a good buy and hold? I've been asking him this question, like, what is the number one stock that you would just keep adding and just kind of put it out there for like 10 years or longer? And he's always told me it's Google. And we went over it. We went over the PE of Google. We've gone over the numbers, and we've done it in these sessions. These are the only sessions that I do with Matt, but yes. So legends, LOL, facts. Yeah, you need to know how to short, dude. If you don't know, then you're gonna get smoked. Donald, I've been buying SQQQ. We're trading that every day, brother. I think Donald, you're in chat room here, but I know I talked to you. Yeah, SQQQ and UVXY great inverses. Yes, absolutely, man. We'll buy calls on the VIX or puts. Like as you see, Matt is able to trade anything that you give him, like everything from like commodities all the way to shorting meme stocks like Viacom for that like 3,000% gain, and even the Chinese ETF, which is the other side of the world, but we're still able to make money on it, right? So the opportunities are there, and there's no better person to kind of highlight those opportunities for you than Matt. He's got the experience, he's got the knowledge, he's been in the game. His anniversary of 40 years in Wall Street is going to be on the 29th of this month. So if you're one of the members in the chat room, don't forget to congratulate him. That is a great achievement. Anybody that has been successful and in their career, their field for 40 years speaks for itself, right? So he's very accomplished. He's a very smart man. He knows how to trade. He's a great analyst. And for the most part, you will not get good traders and good analysts in one person. Most people are one-dimensional. They're either, one thing, like an accountant, how an accountant is, like a stereotype kind of, and how to marketers and like salespeople, there's different, traits that people have, but it's very rare to find somebody, especially in the stock market industry, that is a great analyst and is also a great trader. Most of these great traders, that's all they are, great traders. They're not able to analyze, the data like other people do. It's very different. Like if you have a CMT compared to a Series 7, these are you're trained differently. You're looking for different things, So with Matt, you pretty much get the whole package. Keep in mind that he's a chief market strategist at Miller Tabak. He provides institutions with research worth millions of dollars, and you are literally paying $1782 for the year to have him all day, Monday to Friday, on demand, giving you trade ideas and education. So the value is there. I mean, the value is there. If you can't see it, I can help you see it. but yeah. So the other thing I wanted to talk really quickly. So the inner circle chat is where everybody is, everybody, including Matt, is talking. Then Matt's important messages. This is where the action is. So I'll tell you how I do this. So I turn off the notifications for the inner circle chat because otherwise you're going to have legit 300, 400 notifications. And it has a sound alert. So I only have the alerts for Matt's important messages, and I have this open every day. If you're able to have your Gmail or your Instagram or any of these things open, there's no reason why you cannot have this chat room open. This is actually making you money. If you can have Netflix open or any of these things, there's no reason why you cannot have this chat room open and make money with Matt. We're there the entire day. Okay. So you can, I know a lot of people also, that they, let's say they're starting, and they just want to learn a little bit. So maybe they're paper trading, and that's, it's very good to do paper trading when you're starting out. But then there's several people I know that they're not trading in the chat room. They're just reading, and they're not even commenting. They're just reading what other people are talking about, and they're learning as they go. So for example, if let's say I wouldn't know anything about anything and I just started, the best way to learn is to be exposed to it, whatever it is. So you can see that, if you're starting out, you're going to read these conversations of these traders, and you can see, oh, they're talking about this. What is that? Let me look it up. Oh, okay, now I know. And then the dots are going to connect. Eventually they will connect, right? It's not a one-day thing, but I'm telling you that this is the best first step that you could do, especially because there's a lot of crappy services out there. There's a lot of pump and dump chat rooms. When I started, I got into a pump and dump chat room. It was really bad, but I didn't know about that. So it's like, when you're new, it's very easy to make mistakes because you're new. And the majority of the money that you're going to lose as a trader is when you're new, when you're starting. So now if you are starting, you want to start the right way. Don't start by yourself, winging it, doing crazy calls and puts, like any of these dumb trades. Like, you have to find a community, especially a community that has a mentor. And there's nobody more qualified than Matt Maley. I can tell you 100%, he's the most qualified person that we have here. He's extremely smart. He knows his stuff, and he's great with new traders. So if you're a new trader, the first thing is obviously, you need to know what you're talking about and what these things mean. But as you see the conversations in the chat room, you're going to be able to identify these things and be, okay, now I know what that means. I didn't used to know what that meant. And then you're going to see other things and, okay, well, this makes sense. And that, okay, well, this is because of that. So there has to be a moment of learning. And if you like learning on the go as it is, with real exposure, right? I'm not saying trading, but I'm saying real exposure to real trades, to real traders. And I know people in this chat room that have over $1 million in their account. So, but there's also people that are starting out with $1,000 or $2,000. So you have people from all walks of life, with all different types of account sizes. And I remember when that FXI trade happened, my email was just blowing up of people just being like, hey, Rodrigo, did you check out this trade? I made such and such. And I'm not going to call out the user specifically, but I know an individual that made 6 figures on that trade. So, and probably there were more people, maybe some people made more than that, but that FXI trade was like 8,000%, like 7,800%. I mean, that's when you have trouble calculating how many times, how many X times you made your money at, you know you're in the right chat room. Now, those trades don't happen every day, obviously, because that type of volatility is not in the markets every day. But when the volatility is there, that's really where we make our money. So if there's volatility in the markets, if there's a Fed meeting, if there's a Quawitch, whatever it is, whenever there's volatility, that's when we jump. And there's a lot of traders, like you don't have to trade every day. You don't have to be trading every single day. All right. Like you can jump, like, for example, I'm not trading every day. I don't have the time for that. I'm so busy with the stuff here inside and Benzinga and stuff. So I don't have that time. But when there is a lot of volatility, when there's a Fed meeting, when you have these events that you know they're coming, you can prepare for those events and you can make some nice trades there, right? You don't have, look, it's quality over quantity. That's the way I see it. However, that doesn't mean you can't make money every day. And Matt does that in the chat room. So I think it's great for new traders. And if you're an advanced trader, it's even better for you because, I mean, you already know your stuff, but then you're also going to be able to learn from other great traders, other traders that are very good in their options trades, including Matt Maley. I promise you, you will learn something from Matt. Like, there's no way that you don't learn anything. And there's in the chat room, the trades are there as well. I just want to show you how the trades are set up. Whew. All right. So, okay. Well, he was saying he was going to surgery. So he had a hip surgery. But just to give you an example, really. Okay. So you can see this, it's pretty straightforward. Like, I'm going to add to the TQQQ and don't buy this trade, like, because this is a trade from like a couple days ago, I think last week. I don't know. I'll check here. This is from, let me move this. Okay. That is on the A10, wait. Okay, that's the most recent one. So, okay, so you can see this is from last Thursday. So you can see everything is dated, right? So let's say these are from last week, yesterday. Okay. Nice. This is a great trade idea. Talking about the dollar. So you see, like, we're not trading Forex, but we could trade the dollar. We can short it or go long it. I even know ways that you can trade the euro or the yen with stocks. Now, it doesn't mean you should go do it. It's just that when the opportunity comes, you should know that there are ways that you can make money with things that are happening besides just stocks, currencies, commodities, even crypto. Like, we trade coin. Whenever we're trading, we don't trade Bitcoin directly. We trade with coin if we're trading the Bitcoin stuff. But for the most part, we're trading the NASDAQ, and we're doing that through TQQQ and SQQQ. These are triple leverage inverse. Well, the SQQQ is an inverse leverage ETF. They're both 3 times leverage. That is what I do to trade. I don't trade stocks for the most part. I specifically trade this stuff, and it's because of Matt. So Matt has helped me personally in my trading career a lot. I have benefited a lot from this chat room, and I know a lot of these members have as well. So you can see he's talking about the dollar. He's talking about like TQQQ. And whenever he's putting a trade, you can see that he's very specific. I'm going to buy some of the TQQQ November 25, $17.50 puts before the end of the day today. All right. This could not be simpler. Okay. This is as simple as it can get. It cannot get any more simple than this, or easier to follow, because you don't have to crack the Da Vinci Code here. All you have to do is follow Matt's trades. You follow his trades. If he gets in, you get in. If he gets out, you get out. it's as simple as it can get. Now, once we get the push notifications out, this is going to be great. Because look, honestly, if you have a trade, like you shouldn't just take a trade and go grocery shopping. Like because these are triple leverage ETFs. And if you're buying calls and puts on it, like if you want to make max profits and minimum losses, my suggestion is to have the chat room open all day. And the more you participate, the better. You can build relationships there. There's a lot of great people in there. You will make friends as well, because these are technically your coworkers. You know what I mean? Because you're all working there together with Matt. Like, you're there making money, you're making income, right? So it is a workplace. We try to make it a great workplace for everybody to have fun, to learn, make money. And it kind of feels surreal sometimes that there are people there that are making so much money, and their job is technically getting trades from a chat room, and they can make some solid money with that, right? And not just that, but if you're a part-time trader, you only get in when you're trading. Like, if you're trading for a specific, some people trade, it depends if you work from home or, it's always different for everybody. But once we get those push notifications out, this is going to be another level. Okay. It's still great though. Paul, how is an open trade followed? What if I missed the message? Well, if you missed the message, you missed the message. The message is there. It's posted. It's live. So once he does the move, he will post it there. Okay. So if you miss it, then you can ask him, hey, Matt, is this trade still good to enter on? I missed it. Now, that's the benefit of the chat room. You don't get that on a newsletter. You just don't. So in the chat room, you get that added benefit that you can ask a question, a follow-up on a trade, even ask feedback on your trades, right? I know several members there. I know Tiff made I don't know, I think it's like 3,000-4,000% shorting Target last earnings, I believe. And so the members are learning, and they're able to do these trades. And you'll get opportunities like that where you have the members calling out trades if they see something out there. And Matt reviews it. I remember Snapchat, another huge winner. And I forgot who it was, but they were shorting Snapchat on earnings, and Snapchat tanked, and it brought the entire market down with it. And those puts, I think, were up like 400%, or some crazy number. It's and those numbers, you can only do those kind of numbers if you are trading the way we're trading in the chat room. So as you go, you learn how to do this. You can find your own trades. You can get feedback from the other members, like, hey guys, I want to short Facebook. So, and then you'll get feedback from other traders. I think there's nothing better than that. Like, if you try to do this on your own, that's really where you're going to make mistakes, because you're just in an echo chamber, talking to yourself, So yeah, Legend, are you a member? How do you know all this stuff, dude? You can ask if the trade is still good to take or not. Absolutely. Yeah. That's 100% what you should do. Legend, I better see you in the chat room, dude. But yeah, this is something that you guys will be very happy that you made. There's no better investment than investing in yourself. That is the best investment that you can make. And if you can invest in learning a new skill set that makes you money, okay, we don't take a percentage of your wins of the chat room. So those are all your profits. So this is an investment that you're making for you to make money and to get educated, because there's a lot of education that goes into the chat room. Discussions of markets, Fed policy, discussion of rates, discussion of different industries, discussion of companies' earnings, balance sheets. Like, there's no class in college that will teach you this. And it's going to make you a much smarter person. And it doesn't matter what you're doing. Like, you could be working in anywhere. And if you are educated and you learn a lot about the markets, you're going to be able to have higher level conversations, and it's going to help you in your job. Like, I know realtors that have learned a lot from the chat room about rates and things like that. And now they're able to close more deals for their customers. And they're realtors, right? So nothing to do with the stock market, but it helps you overall understand what's happening in the economy, how it can impact the economy. And when you talk to your customers or whatever you do, and you have that high level knowledge, it's definitely going to help you no matter what you're doing. Okay. Separate from that, you're here to make money in the chat room. That's what we're doing there the entire day. That's the goal of the chat room, like that's why we're doing that. Legend, you should try this one, man. It has my stamp of approval. Okay. You should do it. I'm telling you, man, you should do it. And okay, so we gone over some of the things here. Matt's important messages. That's where you can find the entries and the exits. And I'm going to post the link for you guys to join if you have any questions. Feel free to reach out. I did put my contact there if you want to send an email or anything like that. Big shout out to you guys. Let me just make sure that there's no other questions there. All right, we're good. All right, folks, big shout out to you guys. Thanks a lot for being here. My name's Rodrigo. If you have any questions, just send an email or call. And if you want to sign up to trade with Matt, the link is in the chat so that you can join. Thanks a lot for being here, folks. I appreciate your participation, your attendance. It means a lot here for you, for me, and for Matt, and for the community here, the Benzinga family, right? So you're welcome, Legend. I'll see you in the chat room soon. Deborah, it's always a pleasure to see you here. I hope you're recovering well. Porters, you got it, dude. I'll see you guys in the chat room. Have a great day. Stay safe. Happy trading.